Hey folks, welcome this evening to another Money Space with me, Kalu Aja. What a wild week it's been, guys. We're not going to waste any time. We're going to get right into it. So last week, or should we say this month, I know Lumide always do the quarterly reviews. We look at the market, US and Nigeria, sometimes Canada. I know we say what has happened and what's going to happen, in the next quarter. This quarter is very different because if you look at what the markets have performed last quarter and what we're seeing in the market, i.e., the tariff induced volatility, right? And the change in total, the way the globe tracks money and all, there's been a big change, from last week and this week. And that change is just so massive that you even have to ask yourself, is there any point reviewing last quarter? Because it's a brand new world. This is a global issue. Nigeria, Ethiopia, China, Canada, the US, everyone is responding. There are opportunities, there are threats. So it's not going to be the same, it's going to change. And what you're seeing with the stock markets are reflecting that uncertainty. Stock markets reflect the future. GDP reflects the past. So when there's uncertainty, markets respond by stopping. And when you stop, you just don't say, oh, I'm not going to trade. You stop means you take money out of risk. You sell shares, you de-risk, you take your money out of the market and maybe you go park it to buy bonds or money market. But that taking your money out of the stock market because you want to de-risk is what's causing the market to crash as you're seeing it go down, right? And then, of course, where's the money going to? The money is going to bonds and other fixed income, or should we say safe assets. That's what's really going on. The markets do not know yet how to price in the uncertainty caused by the tariffs, so they are taking their money out to pause and to see what's going on. If you look at the total globe, total returns of all the asset classes, I think I posted this last week. Let me just give you the numbers again this week. Crude oil is down. So you would say normally, well, what's crude oil is tied to the global economy. If the markets perceive that crude oil or economies are going to slow down, they'll use less oil, less diesel, just like Nigeria. If there's going to be a recession in Nigeria, many companies will not operate, so they use less diesel, so diesel price goes down. So you see crude oil down globally. Same with natural gas down globally. Crude oil is down 6%. I'm talking about WTI now, the West Texas Intermediary, not Brent. But of course, crude oil across the board is going to be down. What about gold? Gold is this asset we saw last week, climbed up crazy returns, went as high as about 38 or so. So big returns for gold. Gold doesn't pay any dividends. People buy gold because they believe that if you hold gold, you are insulated from a market fall or market volatility. But gold is down. Gold is down 7%. Sorry, 2%. I mean, gold is down 2%. So again, you can't hide in gold. Gold might be down because folks are taking profit, but gold is down. Let's go to the Dow. All the indexes, the Dow Jones, the S&P, the Nasdaq, all down for the week. Let's also now go to Bitcoin. Bitcoin also down, for the week. Not a lot, down about 1 or 2%, but down. Let's go to currencies. Everything is down. Euro USD trade is down. Pounds USD is down. The only thing you have some green is when you look at the USD Japanese yen, and that's a defensive trade. That's up, but that's a defensive trade. Treasuries are also down, but remember, treasuries are opposite. When treasuries are down, that means essentially that your yields have come down, right? So keep that in mind. So the point is, everything is down. You can't hide from the market uncertainty. If you are in bonds, you lose money. If you are in gold, you lose money. If you're in Bitcoin, you lose money. So what exactly is going on? Again, it's the uncertainty. Markets don't like uncertainty, so they are de-risking to go into safer bets. When they run into the safety of treasuries, it means that the price of treasuries goes up. Does the yield of treasuries come down? Remember this, because we're going to come back to this. Because we're going to talk last week, and we're going to introduce tariffs. Everything has got to be tied back in. So let's just start and go straight. I mean, you guys are tuned in to listen to what's happened in the markets for the quarter. Let's review the Nigerian market, right? And before we get to the US, let's talk about the Nigerian market. Olumide is supposed to be here. Once he's here, I'll add him. But of course, guys, if you have a question, you want to speak, you have to take, just request, maybe after my first 15 minutes, and I'll add you guys and we can have a really important discussion. Let's start with Nigerian stock market, the risky part of the market. So in any economy, you're going to have two parts of the economy. When you invest, you only have two choices. You either invest in risk or you invest in no risk. In other words, you either invest to get a variable return, which means it can go up and down. That's risk. Or you invest to get a fixed return. So you know exactly what you are getting. There is no risk. So you either do risk or no risk. Stocks are risk. Stocks are risky, which means they are volatile. Year to date for the Nigerian Stock Exchange, Nigerian market is up 2.66%. So what that means is if you bought the index means if you bought all the shares listed on the Nigerian All Share Index, if you bought everything, you would make some money, you would lose some money, your return would be 2.66. It doesn't even touch inflation. It's not even near the rounding error of inflation. So it's really down. January was up 1.53. February was up 3.09. March is down 1.91. So we're back at 2.66. So in Nigeria, you can see that the risk is off as well. Folks are saying, we don't take a risk in Nigerian stock market. But why are folks saying that? Before we get there, let's go to the individual sectors. What sectors are doing well on the stock market? Again, this is not the economy, but what sectors in the stock market are doing very well? The highest performing index, sub-index in Nigerian stock market is what we call the Islamic index or the ethical index. So if you're not buying alcohol or if you're not buying in interest, but you're just buying industrials, Dangote cement, that sort of thing, you are up 8.56. Then of course you have your banking index, your pension index, consumer goods index. They are all doing pretty well, but the average is still going to be at that 2% for you. It's not doing anything. But why is the market not doing anything? The answer is because of the yields that we get from the money market. So let's go to the money market. Money market is now no risk. If you do money market, you are not taking any risk with your principal based on the issuer. So it's an issuer risk-free market, especially if you're doing federal government bonds and federal government treasuries. If you buy a federal government treasury, you have no issuer risk, meaning that Nigeria can simply print back money and pay you. So you don't have any issue with your principal. Nigeria has gone from about, let's say the bond yields, right, for Nigeria will be about 19%, we're about 20%. That means that, right, guys, if you take ₦1 million and you buy a federal government bond, on the average, you get about 20% without risk. So why would I then go invest in the stock market that's going to pay me 2% or 8% when I can get a guaranteed 20% from the federal government without risk? Again, guys, this is the return. You are comparing yield for yield. This is the problem. If risk-free is paying you 20, this is the federal government, which means the private sector is going to pay you much more, 25, 26. Why take the risk in the stock market? That's why you see more monies are moving from the stock market over to the fixed income market. It's always a movement. Money does not sleep. It doesn't stay in one place. It's either invested or it's moving. You don't take money and look at it. There's no one has ₦1 billion in his home as an investor. It's either in the stock market, it's in properties, it's in fixed income, but it's moving, right? So money has left the stock market, which is a risk, and has come to the fixed income market, which is now the no risk. What about treasury bills? It's come down. We used to be as high as 25%. Now we're about 21, 22%. So if you are offering this sort of yields to investors, and I have 10 billion for my investor to invest, why would I take the extra risk in the stock market? The stock market has got to give me fantastic results to allow me to come back to it. If it doesn't give me fantastic results, I'll stay with the fixed income market. So now we've talked about the fixed income market in Nigeria. talked about the equity market in Nigeria. Let's now go now into the particular funds. These funds of funds where you can say, I want to buy maybe dollar, I want to buy equities. Which ones are doing very, very well in Nigeria today as at Q1 2005? Now, guys, if you did money market in Nigeria, money market funds, I'm not going to name the particular broker, but the average money market return you would get in Nigeria is going to be about 31%. 31%, 31%. That's a lot, guys. That beats inflation, right? So, again, stock market is doing 2%. Money market is doing 31%. Do the maths, guys. Stock market equity funds are on this my report here are doing 13%, 1-3. 13%, 1-3. Money market is doing 31%, and money market has less volatility. So you would be quote unquote foolish to take your money and invest in stocks at this time because the yield on money market is higher than the yield on stocks. But again, remember, folks that buy stocks are buying for the long term, not for today. What about dollar? Dollar is pointed to reign last year, the year before, because of the dollar appreciation. If this quarter to date now, dollar funds are doing negative 18%. So if you bought a dollar fund because you're trying to escape, should we say, inflation, you might have that. You would escape inflation, but your return is negative 11%. This is both dollar funds, dollar income funds. You are also doing very, very badly, right? So balance funds are giving you about 8%. If you are doing real estate funds, also very, very low returns, 1.28%. Again, these are fund returns, not the individuals, but the fund itself. So the picture of Nigeria for Q1 is very, very easy to follow. Stock markets are down. Fixed income markets are up. Dollar funds are down. Property is down. So Nigeria is risk off. The problem with Nigeria, if you notice what I'm saying, is upside down. If you are not taking risk, you should not get all this 31% that you are getting from Nigerian government. The problem is that the Nigerian government is giving you very, very high rates, but it's not charging you any risk. So you'd be foolish not to take advantage of that. Hence, money market is doing 31%. But equity is doing 13%. Makes no sense. Olumide, I've tried to give an overview of Nigeria. I've not even gone to the $1 trillion returns that the banks are doing already. We're going to go into that individually. Zenith, GT, UBA doing trillions, right? I want to talk about that. But just on an overview, this is where we are right now. We're going to go to tariffs, but this is where we are right now in Nigeria. Money market is doing very, very well. Equities, not so well. Property, flat. What's your take, sir?
Thank you, Carlos. Sorry for being late. I had some personal issues, pretty much preparing for the sun returns this time. So, basically, good evening, everyone. And it's a pleasure and privilege to be on Carlos Space, I think for those that have been following you, Carlo, I think many of them should be happy by now because you repeated this. We had this early this year, and most of the things we said came to pass. And I spoke about the fact that being Nigerian, people were talking, no, now it's useless. Now the problem government. I think people have seen reasoning on why diversification and asset allocation plays a key role. I think the winners in this year so far, is asset allocation, particularly Nigerians that looked inward. You mentioned money market earlier, and I spoke about the utility of why money market makes a lot of sense, particularly as a Nigerian or in Nigeria in diaspora. So for me, for example, I increased my exposure from Q4 and Q because I felt like the market was peak, though I left sizable amount in US stocks. So I moved to money market probably because I was more cash flow inclined. And you talked about real estate. For those that really are not so buoyant or intellectually incapacitated to hold financially compensated to hold a huge amount of real estate exposure. They've been the REIT, though it's not as liquid as you expect. They've done decently well. I think I did a report. If you look at it in the space of this quarter, they've done pretty better than most blue chip stocks in the United States, even after adjusting the foreign exchange earnings. And another thing again is that Naira strengthened from December to April. If you look at the value, you get roughly 15%. So it has been positive for conservative grade securities and graded securities. And I think Stanbic giving 22%, Cardinals 23%, different stem around 23. So the average of 2022 money market has been very decent. Then, equities individually, yeah, collectively, the NGS it's about 2% year to date this year. But if you look at the individual entities, particularly the agro, livestock feeds 72 year to date percent. Look at Presco about 60%. Look at livestock feeds 72%. Banks from GT to Zenith, I'm giving you over around 20 because many of them had a stellar run. So individually, we had some decent optics, but I don't think there's any stock on the NGX that is suffering like the way we are seeing Tesla suffer. And that's pretty much because the Nigerian stock market is quite decoupled from the Nigerian economy for three reasons. First, the market has been at all-time low for so well. Valuations are so cheap. Disposable income is pretty much weak. You look at the stock market downgraded. The Nigerian stock market was downgraded by top credit firms. So FPI ratio to local investors is 9 to 1. For every 9 local investors, you have 1 FPI. So the leverage that has brought to Nigerians is that you see more stability because FPIs are known to really increase market volatility, especially when uncertainty like this coming. You see that they pull their funds. So they've been stability in the market, which has been very positive. So, Carl, I think in summary, I think it for me, I think asset allocation is key. Warren Buffett, left a significant amount in Apple, but he has about $334 billion in cash. And I think for folks in Nigeria, particularly those in diaspora, I think lessons like, it's good to look at our market, but there are so many nuggets in our market. For example, I am exposed to the European market. I have Euro bonds giving me 2.75%. I'm paying a 30% tax on that 2.75%, except I hold it for 8 years, where the federal government reduces it to 22%. Now I'm looking at the ability to split the European bonds. It's also giving me close to that. Then the Americans, you get 4-5%. But if I move with Stanbic or GT or Zenith, I think my dollar funds, I can get 5 to 6%. Then if I'm richer, like upper middle class, then I can look at a Standard Chartered where I can open a parity account and tap into BlackRock, tap into many stock ETFs, which definitely will give you higher returns. So the cost of capital really made a difference, Carlo. For those that really went through fintech rates, I don't know what to say. I think they should start thinking of the village, except they have long term. But the average Nigerian does not think long term because disposable income is not so solid, and that's the problem we have in our stock market. Carl, if you look at the US, high dividend stocks don't really do too well. It's a sign of the stock is aging. But in Nigeria, we take dividends, so we take cash flow very seriously. So if you're doing so well and you're not paying so much dividend, you're really going to suffer. And that's why if you look at stocks like UBA, Zenith, GT, they really, because of the cash flow they bring. So I probably think that it's a lesson for us to look at, and we should not undermine our market despite the politics that look very disheartening sometimes.
Good point, Olumide. Olumide, so let's talk maybe clearly about the Nigerian returns, right? So if I have $1 million today and I just put the money in the bank, I would have made more money than if I bought stock. This is average. I hear you list out the individual stocks, but if I'm a newbie, I don't know the individual stock. I don't know what to buy. So the average is that this fixed income market is doing far, almost double what the equity market is doing. Is this healthy for a market that is younger, needs this long-term capital? Is this going to be a healthy return that we have risk-free? This is risk-free, Olumide, risk-free returns.
Yeah, but Carl, you should know why it's happening. Definitely, you know why it's happening. It's an opportunity scenario. We are trying to attract FPIs. Crude oil production is still TP, and remittance is not the levels we used to have. So, what's really bringing FX is FPIs. And what the CBN has been able to do is really create that incentive. I think I kept hammering on that. See, the Naira denominated assets. Youth are attractive because the CPN is trying to reduce speculation. You need to understand why rates are high. So NPS has really been part of the signs where we have the stability. Sorry, the catalyst behind the stability in our FX market, and playing to retail, it's a good opportunity. Looking at, for example, looking at money market, just doing nothing, just putting your funds. Apart from the 1.5% you pay, you get 22%. And if you are more connected, you go primary to the primary treasury market, you get as high as 6%. Where FPI. So yeah, can but it's not going to be a permanent scenario. We really having that kind of spectrum because we're trying to stabilize our currency. The CBN really needs FPI, so there's an incentive, and that's also a disadvantage because if you look at our total debt, the cost of total because we're paying, there's a premium for paying high interest, because we're definitely going to pay them by printing or we're going to pay them. So I think for the Nigerians that really looked at the fact that they had this 40-30-30 where they really put cash and emergency funds in the money market. Then they looked at risk, they looked at mid risk, they looked at high risk. I think it makes a lot of sense than just you because if you look at dollar for those that really want to hedge, so let me do the math for you, Carl. I met you last year in February. It was at 1,900. So I put let's just make it round. I put $10,000 worth of into Nigerian Treasury bills at 1,900. That's 90 million. Now, you cashed out February at the average of 25%. If you do the average of 90 million, 25%. Now, the naira changing it back to the dollar, you've gotten about, if you add the whole premium, you've gotten about 50% because the naira strengthened by more than 30%. And you're getting about 19%. So the trick here is that even for those in the diaspora that really explore the Nigerian market, I think there's nowhere in the world, especially in emerging markets, where you get return on fixed income, like you said, at 10%. Too, these things are not straightforward. But I think for those that believe the market, they really got rewarded.
Completely agree with you. Just the point I was making is that, yes, you make money, but in an economy where risk-free rates are high, it simply means that for the SMEs that want to borrow, their rates are also high. And that's what we're seeing with the stock market is reflecting that fall in earnings. So the smart investors are leaving the stock market to go to the money market. That's what's going on. Even dollar is down.
I don't think so, Carlo. To be honest to you, you know why I would say I don't think so. So if you look at the money market, because I have been following the inflows and outflows of the money market and the fixed income space. The fixed income space in the first quarter dropped seriously, and that's because FPIs took a profit. Now, if you look at the capital market, it also was kind of weak. Why? Because we had aggressive runs in 2023, 2024. In fact, if you look at what happened in 2024, I was feeling like as early as January it should be set up, but the market still rallied January, February. So investors really amplified profit taking. So these solid bank earnings have brought some stability, but I expect to see more profit taking, particularly after dividend has been taken.
Yeah, I hear you, but I'm looking at the actual returns now. So the actual return for the banking index is 6%. So if you bought the total, all the banks in Nigeria in the stock market quoted, you will make money, you will lose money, you will come out at 6%. That's for the banking index. If you bought that banking index, if you did money for this quarter, January to March 2025, correct? This quarter. If you put your money in the money market, average you're making 31%. This money market, 31% on average. Dollar, you are losing 11% on average. This is the point I'm making, that the yield is what I'm focused. The yield is saying that if you have money in fixed income, you are making more money. You can let's now go into, since you bring that up, let's go into the individual banks now. Let's now hop into the three banks, the ones that are making all the noise now, right? Zenith, UBA, and of course GT Bank. We saw 1 trillion naira plus returns, PAT from these banks. And if you look at, let's just talk about Zenith. Let me go to Zenith. Zenith's PE ratio is 1.9. 1.9. For those that don't know what that means, if you buy Zenith Bank at the price today, what's the price today? The price today is, let me look for the price today. If you buy GT Bank at this price today, it's going to take you 1 year, say 2 years to get your principal back. That's what that PE ratio means. Is debt cheap? Debt is cheap. 1.9 is seriously undervalued. Seriously. What the numbers tell us? So
but Nigerian banks have always been naturally undervalued. Like I mentioned, you look at our stock market, for example. I was talking to a lot of friends, and I said that look at Zenith's return on maintenance charges. Made 71 billion naira. Look at what they made on interest income. Look at what they made non-interest, and look at the dividend. Look at their payouts. They have solid numbers, Carlo. I think the problem in our market is not really because it's not the problem with our banks is not that they're not solid. I think if you're looking at it on the spectrum of emerging market, Nigerian banks are the most profitable per margin. GT has a margin of about 38%.
Do you know what Zenith Bank's gross margin is? Guess the number.
No.
100%. Their gross margin is 100%. Their net margin is 46. No, gross margin. Sales less just operational returns for Zenith is 100%. Then if you take net margins now, i.e. for the company, not interest, this is net for the company. Net profit margin is 46%. 46.
Okay. So So
dividend yield for Zenith 10.4. 10.4. So I mean, it's good.
Yeah, it's been like that, Carlo. But like for me, if you just look at it from a quantitative, like you're speaking from an expert view, I think a lot of people will miss it out because you look at the earnings when they came out, the banks didn't really move so much, apart from GT that looked like was going to break the 70 naira resistance, and for many reasons, a lot of people are still worried about share dilution, and the market seems not to be able to accommodate these banks, the bank earnings, because, like I mentioned, if you look at the trading volume in the stock market, it's still pretty much low. So we still have a lot of work, for us to see the true value, the intrinsic value, the value of these stocks, is disposable income has to come up, inflation has to be down, the federal government has to create incentives, market makers. We don't really have market makers. The incentive to hold Nigerian stocks, forget the fact that we are being patriotic and the fact that we are seeing value. From an investor perspective, I was on this guy's, this popular hedge fund, Ackman. I was on his space on Twitter, and I asked him why he hasn't invested in Nigerian stocks, and he gave a polite reason, but I really understand, their funds cannot really, the liquidity in our market cannot really help.
Which goes back to that first question, They do go to that first question I asked, that if funds are leaving the stock market to the money market, that takes away the liquidity in the stock market. But again, I want to just go back to put the numbers that I'm looking at, just numbers for Pooh, just to Pooh to understand. Look at Nigerian banks. Access Bank is 1.5% PE, 1.5. GT 1.6, UBA 1.7, Zenith 1.9. These are very, very cheap stocks in Nigeria, doing crazy numbers. Dividend yield is not beating inflation, but it's 10%. It's 10%. Earnings growth for Zenith Bank 13%, UBA 4%. GT is actually negative. GT's earnings growth estimate is actually negative. So it's a mixed bag when you come to Nigerian banks, which is, I guess, what you're saying and what that guy said. You look at these banks, the numbers should tell you this is very, very cheap, go and buy. But then you get in and then you see that they're making their money from fee income, i.e. a bank should make its money from interest income, you should take money from savings surplus units and give to savings deficient units. The return it makes, that difference is real banking. So if you have a bank making 100 naira and say 80 naira or 80% of that 100 naira comes from interest income, that's a very, very solid bank because it's doing this traditional banking and making money. Where it gets a bit crazy is where you have that same bank making nearly 50-50 from fee income and from commercial banking, which means that the bank is making money from FX. The bank is making money
Yeah,
from fees. That's where I think the Nigerian bank sort of dropped the ball. It's a lot of profit, but if you make a trillion and 500 billion comes from you simply trading dollars, are you really doing banking?
yeah, but Carlo, that was the argument in 2024. When FX valuation gains but look at GT's result, for example. Let's look at GT who threatened UBA. These guys they've been very creative. Yeah, you could still say that the trading because I think now if I'm going to put those banks like the American banks, I think GT looks more like a JP Morgan. They've been able to really the capital
I
utilization.
will put
JP
them
Morgan
more
has
with, I will put them as a
assets.
Goldman Sachs. I will put
Oh
them
yeah,
as
yeah,
a
because
Goldman
of
Sachs.
you know what? I won't put. I think I have a better candidate for Goldman Sachs because I know where you're talking Goldman Sachs because of looking at the investment side. But I think the bank I'll put as Goldman Sachs is most likely Stanbic, and that's because of their asset and trading. In terms of FX and asset management, you can't any no banking institution takes that from Stanbic. And Peter Attis side, if you look at his body language over the years, he has been able to create a solid management team. Shola has been on Stanbic for a while. From the ISPDMD, she's now the chairman, and she has been able to really. So there's that part continue despite the fact that Peter side is not. So most likely you can't take Stanbic away from investment. In the FX market, Stanbic is the alpha and omega. They control about a fifth of inflows in 2024. So that's why I call them the Goldman Sachs. The reason why I partly agree when you say JP Morgan might not be GT because when you look at JP Morgan's assets, quite massive. But one interesting thing about GT is that cost of capital very low. And another thing again is that um, Sheikh Magbaji has been able, I don't know how he does it, but he has been able to really squeeze a lot from their assets. Their assets is not too. You look at customer deposits. You look at the UPA, for example. UPA has Optic. You look at Zenith. You look at assets. You look at First Bank. But what GT brings, return on equity, earning per share, is crazy. They're just behind UPA in terms of dividend yield, 11.6%. So, unsurprisingly, the stock is really popping up. You ask a lot of bookmakers, will tell you that the stock should be trading at 100 naira at least. And another thing again about GT again is that FPIs really have large stake. And we can keep saying all these things fundamental about each bank, but I think every bank has their own uniqueness. You be massive dividend yield. You be also you look at interest income growth, you look at the trading, and the way Tunisian has been able to position the bank, it tells you that they're not really interested in fintech licenses because it's the only tier one bank that really is aggressively not on fintech. And I partly the reason is because the money they make on electronic banking alone is bigger than what you see in many tier two banks, entire profit. So solid bank from Elumelu. Then going to tier two banks, you see Fidelity, you see Stanbic, you see Wema. Wema declared dividend yield of 9%. Also, I was really disappointed about First Bank. And a lot of things have been happening in First Bank of days. And while I am optimistic about Ben Motola being the chairman, I was disappointed dividend. A lot of people are talking about dividend, but you can't take first away from banking industry. And sorry, Ben Motola's relationship with many of these big boys, Dangote Refinery will definitely play a key. So yeah, First Bank is really an interesting watch, and they selling their investment I think was the right decision. They're looking at more margins, but I'm quite worried about their liability. Access result is not yet out, Carlo, but overall, I think tier one banks are solid. Tier two banks pretty solid. Sterling, Sulaimon, interesting. Fidelity, my favorite. It's just that the problem I have with Fidelity is that I think the stock has risen so much that I think the upside in future might be limited. So drawbacks are coming, but Inaka has really done a pretty much job. She's somebody that I really like so much because she allows her result talk and she does less talking.
Okay, Olumide, just on the beside, do you if you took away FX from Nigeria, are Nigerian banks a good buy? Just on if this five banks are they a good buy? And if I was an investor,
Yeah, 2020, like I mentioned, if you look at 2024 and you look at 2025, you see that the banks are less reliant on FX. Like a lot of people say, look at banks, and one of the reasons why these banks are making money also is that the cost of capital and we are in an high interest rate environment also plays a key role. And smart guys, so definitely I'll definitely hold on to these banks. Asset management, like I mentioned, you look at Stanbic, they're really on that. Wema Alert has really transformed Wema. I thought Wema Bank would be the unity of the future. Not sorry to say that because Wema is one of the oldest financial institutions. But after they downgraded their license, I think the management looked at strategic plans, and one of the things they did was focus on the young generation, and Alert has really brought in so much for them. So I pretty think that those banks are really doing well. Then FCMB too has similar traits of Stanbic, but the MCA too, very brilliant CEO. She has really done a very good job in keeping the culture, and I think their investment arm will definitely do so. I'm not surprised that these banks raised money and they were quite successful. In fact, some of them are going back again. I'm just worried about GT, why GT was not able to get all the funds. But
GT's earnings are projected to decline 0.6% per annum. That's according to the report I'm seeing here. GT's earnings are really earnings per growth -1, growth rate negative, and all that. But the overriding issue with Nigerian banks is this: they have very, very low cost of deposits. They have a very, very high outlet to invest those returns without risk. So a bank can borrow from me at 10% and give to the government at 20%, no risk, and make 10% margin pure. And so if you look at all the returns from the banks, look at their net interest income, their cost of interest, and then the net interest income they're making. The net net interest income is huge, and it's driven by this high federal government borrowing at high rates. So the question is, are banks being subsidized because the CBN and the federal government needs to borrow at exceptionally high rates? Is that what's happening with the banks in Nigeria?
But that's a tricky one. It sounds like technical.
Yeah, engineer, you.
It sounds like that technically, but I think I'll say no.
Okay. I'm just quoting the numbers. I'm not saying they are. I'm just saying the numbers.
Can look at Sierra. Sierra is still high now, 50%. People are forgetting that. And a lot of people think running a bank in Nigeria is easy. It's not, because if you look at the guys making the profits, they're just the main guys actually, and that's why I really gave a lot of admiration to the tier 2 banks for being very creative. The banking environment is very competitive. Very highly competitive, talent-wise, capital-wise, and also, the kind of economy we run. The real sector is not really bringing in the things we expect. Though Dangote refinery might change that in the future, but pretty much the banks really have to be very creative, and that's why I was so happy with acquiring assets in West Africa, because if you look at their growth in the foreign exchange market, it has really tripled. The only concern is their liabilities and some toxic tools, weapons.
So just look at UBA undervalued, doing very, very well, very spread out bank. They're in America, they're in London. They're doing very, very innovative financial packaging. They're the guys that wants packaging NNPC and all. So they look a bit diversified. The returns look to be good value based on PE of 1.7, dirt cheap. Current PE, and just report looks like a decent set up there that those guys are doing. And again, this is not under candidate for a Goldman Sachs. EPS growth 2.4. Remember, I told you that the EPS growth for GTB was negative. EPS growth for UBA is 2.4. Earnings growth rate 4.9. Banks earnings growth 10%. Future return on equity is 26%. So the bank seems to be, they're not making the 1 trillion, but their ratios seem to be better than with 1 trillion naira bank. Again, it goes back to this. If I simply take money and I give to the government and I make a lot of return, I can make 1 trillion naira. But if you then drill those numbers down and say, where is that return coming from? Who am I lending to? What are my growth projections? What's my market share? Then it starts to look like they're building a castle with sand by Lekki Beach. The bank needs to show us a bit more stability in how it is making revenues. Yes, make that fee income, but let me see money come from your interest income. Let me see investment banking. Let me see consumer financing. It's dead in Nigeria. We don't do consumer finance in Nigeria, but at least let me see some heartbeats there. 1 and 2 years, I'll be okay with that, right? So let's get Doctor Engineer. Did you have anything to say?
Yes.
Please go ahead.
I appreciate the call. Just wanted to circle in on the argument on fixed income versus equity that you were raising some earlier in the discussion.
Yes.
So if the trend pushes towards fixed income, as you argue, it's still within the same economy. Take, for example, you have some money, to buy treasury bill, or put it in a savings bond or any of these fixed income facility, that particular amount of money is still used within the same economy. Take, for example, some of this fintech that offers fixed income facility, so put in $1 million, get 25% or thereabout. That money that you are giving to them, they will use it, they will lend it to maybe a real estate company, a manufacturing industry that needed quick short-term funds, and to be used within the same economy. So whether investors are leaving the equity, the stock exchange, and moving towards the fixed income, it is still part and parcel of the same economy. Then the second part I want to make from my contribution, from my understanding, is the profitability of the Nigeria top-tier bank, for example, the Zenith Bank, UBA, and GTB, for example, it has always been there. Even before this devaluation of the Naira, this foreign exchange gains start coming up. Right from 2006, 07, we always see Zenith Bank release top numbers in profitability. Same goes for GTB, and so on and so forth. So because there are so much room for growth within the Nigeria economic sector. Like if you look at the Zenith Bank profit this year, most of those reviews during this full year report for 2024, it reveals that they give the oil sector 4.3 trillion naira as loan. The same goes for manufacturing, more than about 2.6 or so. Then the other sectors maybe around 1 point. So they are lending, not just putting the money in treasury bill and getting profit. They are actually lending to major sectors in the economy. They may not be going too much into agriculture. They may not be going too much into consumer credit, but they are certainly lending to oil and gas, to manufacturing and other sectors of the economy.
That is you make two great points, and if I may. So the first point you make about the fixed income and the equity. So understand the point I'm making here. Wait a little bit. Okay. If money flows away from equities to, let me just mute you. I'm just going to mute you for your audio. I'll just mute you. If money goes away from equities to fixed income, equities are longer term. So if I'm an SME and I want to borrow money to build a factory for 10 years, and I want to just do working capital, equities look like a better bet for me. When you say money is in the same economy, at what cost? If the fixed income market is lending money to the federal government at 20 to 25%, that means to lend money to the SMEs at 20% plus. That's the problem with Nigeria. We are paying too much for risk-free. The risk-free rate should be lower than what it is today because it is so high. If it is so high, SMEs cannot borrow. That's what's going on.
Yeah, but there was a reason. If you look at when the president came in and he removed the subsidy on FX. It took a couple of time for us to get our act together, particularly the stability of the naira. That's why I mentioned that the high interest rate had certain objectives, and one of the things was to stabilize the FX market, because where is the FX coming from? It's coming from FPIs that are bringing in their money to invest in Nigerian treasury bills. So there's a cost. Yes, I understand what you're saying, and it has weighed on businesses, but I think in the longer term, based on recent reports by the CBN, there's been an improvement in FX inflows, FX net reserves. So we expect rates to start falling, particularly with Trump tariffs. So at some point, we see rates to cool off, but we don't expect it too soon, because pretty much with crude oil price coming down.
I want to make the point to engineer. I want to just address the point engineer is making, right? He's saying, yes, money is going from one asset class to the other asset class. The point I am making, what is driving that movement is high risk-free rates. If you go to America, not even America, in any time you borrow money without risk, you should not get rewarded more than, should we say, someone that is borrowing money with risk. If you are paying somebody 20% with no risk, it makes no sense to go and open up a factory. If I have ₦1 billion, why should I open up a tile factory and incur risk when I can take that 1 billion, give it to a bank and make 200 million a year? Will the tile factory give me 200 million a year? It may, but they can close my factory down for not paying this.
When they speak around this country, there's a certain amount you pay, you drop in the money market, you get exposed to capital gains, So
no. There's also taxes in the stock market. The point I'm making is that if you make risk-free rates high, you discourage lending to the SMEs. Yes, I'm not hitting the government for raising rates. There's inflation, and the Central Bank of Nigeria has got to raise rates to fight inflation. That is their job, and they are doing their job. But in economics, it's always two sides. If you raise the rates, SMEs don't borrow. That's the point.
I don't think they're trying to fight inflation with raising inflation.
That's what they're trying to do. They have to fight inflation because that's what's driving your dollar return.
You know what I'm saying? I'm saying that the primary reason why they are raising it is because of the FX market. It's because if you look at the body language of Cardoso and the FX market since he came on board, you see that he has achieved greater success in deploying stability in the market. He started with Bloomberg FX code, he started with different rules, and also FPI interest. And that has really correlated with the foreign exchange market. The Naira looked a bit weaker because FPI participation in the fixed income space reduced in February, March. So you could see that correlation. And I'm also expecting that it might get lesser because of these strong tariffs. However, the argument that there's been movement between fixed income and, for me, I think it's really more academical because fixed income space has been high in 2023, 2024. A lot of people that have participated that have been open, but the stock market has really been on higher run. The stock market now is cooling. I think the money market, people are just a bit conservative. A lot of people are still waiting for some IPOs coming on board. So I think, it's fair to say that, the stable fixed income, but I don't think the stock market is taking, and the fixed income space is taking the shine away from, in my own personal opinion.
Oh, but it is. And I've shared if you look at my Twitter timeline, I've just shared you returns for mutual fund. This is mutual fund returns, right? And you can see where mutual fund returns are. You look at equities, look at money market. That is the actual Q1 2025 actual. So again, engineer, go ahead.
The stock exchange is basically for corporate, not medium to large scale businesses. So a small scale business, the SME, small scale, medium scale enterprises, they usually don't have access to the stock exchange.
That is true.
Because the governance process and everything that is involved. So it is when they begin to get to medium to large scale before they get listed over there. So most times if a small business in the corner of the maybe Lagos, Port Harcourt, anyway, just a small scale business, maybe between 1 to 10 million naira worth business, oftentimes they only approach the bank, maybe microfinance bank or the commercial bank, and at times, in more recent times, they approach some special fintech companies who crack pool. They maybe I remember this company PiggyVest. They will tell you that an investment they need 1,000 persons. If you can bring 1,000 or 10,000, you buy a slot in that business. So they offer that money to this small scale business who do not have access to the equity market. So that arrangement at times usually give them some cheaper, not I won't say cheap now, cheaper capital that they can use to grow.
But they will not. But engineer, they cannot borrow lower than the federal government is borrowing. That's the point I'm coming back to. They cannot borrow no matter what they do in the economy. So see the point I'm making. Nestle wants to build a factory in Agbara. So Nestle is a big corporate, right? Nestle can borrow money either through the capital market, like you said, through issuing shares, or they can borrow money from the bank. If Nestle issues shares, of course it is cheaper for them, right? Although let's ignore CAPM for now. Let's say Nestle is borrowing at 25%. Who will pay that 25%? Their distributors. Who will pay the eventually you pay that 25%. The risk-free rate in Nigeria is too high. It's high because the government wants to fight inflation. I'm not hitting them. It's a fact. They have to raise the rates up to fight inflation, but you kill growth. You can't have both at the same time. High interest rates will fight inflation, but it will kill growth. So the point I am making is this. We have to, when Emefiele was the CBN governor, he was trying to do, okay, I will raise rates, but I'll take some targeted credit and give to targeted sectors to insulate or subsidize them from the high interest rates. Things like that, yes. Things like, we will argue with the implementation, but that is the way we have to look at this in Nigeria. In America, they also have their own quote-unquote anchor borrowers program where the Fed is subsidizing balance sheets. Oh, they're saying if you borrow, we'll give you a credit cover. All those are subsidies as well. So as a developing economy, we can't just simply say we want to fight inflation. We'll keep NPR at 25% and go to bed. We've got to come back to that development side of the. That's just my point, sir.
I think Nigeria, please, we need to reach on my because the feedback will affecting the conversation. Yeah, Carlo, I totally agree with you. I think for investors, because the space is all about returns, risk review. I think for me, like I said, asset allocation was the biggest winner. If you really look at it on the spectrum, you allocated significant amount of money in fixed income space, particularly the money market, the credit securities, or the savings bond. Yeah. You get an average of 20% return a year. And also, you look at the stocks individually, Nigerian banks, dividend yield, average yield. Nigerian banks they are trading at their high, so you can't tell me that they are lost except you bought very recently. And you look at dividend yield, you pretty much done good. So that's why you look at data from Bloomberg Billionaire Index, you see that Dangote has done much better than Elon Musk, except for Warren Buffett. He has really, because the Dangote cement stock has been stable. The refinery business is yet to be listed, and also the Naira showed some stability in this quarter. But it's not the past performance is not a guarantee. So I think people really need to know your asset, your investment bank, because I kept hammering it that you see, you can't just make money just by hearing what to buy, what to sell. Then you see, you miss it out, because now you want to enter the money market now. Well, you
already buy as high. You already buy that.
Exactly.
So
what matters you need to know is that when you're going to invest, you have to have an investment goal. You have to understand the intentions you are investing, the market opportunities being in Nigeria. Because you're in the diaspora does not mean that the Nigerian market cannot offer a leverage. Look at the Nigerian stock market. It's a bit immune to what is happening to Trump tariffs, because the Nigerian economy is kind of decoupled. And also you look at earnings from many of these companies. Impressive. Presco has done 60% this year. And look at the yield. Look at Okumu too. The strong results. So people that really took advantage and had their bets, then you also pay less premium. People that have to change their naira to the dollar through the black market or fintech rate. Many of you guys change that between 1.7 and 1.9. Now the stocks are down 30-40%. It means you are down about 60-70%. It will take you at least 9 months for you to get half of those funds back, because markets don't run in the speed of crypto. So you really need to understand transaction cost, opportunity cost, and the locality around investments. Very, very important for us to talk about, Carl.
Okay.
Thank you.
And I want to just make the point again, guys. I always say this all the time. Don't invest because of returns. Don't say because money market is paying more, I would invest. You invest according to your objectives. So if you have an objective today to say, listen, I want to retire in 5 years or in 3 years, you have no business in stocks, even the stocks are paying more. If you're a younger person, you just had your job, you're 25 years old, you have an RSC, retirement savings account. They will ask you in the RSC, what fund do you want to invest in? I think fund 1 is equity heavy. Fund 4 is more maybe fixed income heavy. As a younger person, you should be looking more at that fund 1, because you have a longer time to compound. So the more you compound, it favors equity. So this is not a 100% rule, but overall, equities do better over the long term because you can compound your returns. Fixed income are more, like I said, you don't lose your principal, but you're getting something fixed and secured. It doesn't beat inflation, but it's there for you. So again, invest according to your objectives. Don't invest according to what you want to make. This is a good time to go to the tariffs now. Is it a good time to because that's the elephant in the room now. Everything we're saying here is not going to work on Monday. So we have let me get TS and Real to just talk, and then we'll go to tariffs proper. TS, you've got the floor. TS, go ahead. TS and Reef. Yes, you are.
Yeah, thank you. Thank you for the opportunity to speak on this space. I only have 2 questions. I'm not too much an accounting guru or something like that. Although I've worked in banking sector for the past 6 to 7 years. I only have 2 questions. Number 1 is with the amount of profit that our banks are declaring, is it good for us to say that the banking or the tier 1 banking or the whole of banking sector generally is ripping off the SME or the engine of growth of Nigerian economy? That's number 1. Number 2 is for some of us, or for me personally, I'm impact driven. It's not just about making money, because there are a lot of ways to make money, be it legally and illegally. Though I did say banks are making money legally. Should I say legally, illegally? Because the way they are actually making the money, sometimes you feel like some people are actually paying for it. You go to the market, a lot of shops are closing, some companies are closing down, and then you see our bank declaring big profits. So for some of us now, it's impact driven. Which sector of the economy do you think offers the best returns or investment outside banking stock? I think those are the 2 I have. Yeah.
Well, Olumide is here. So when I started buying stocks, I asked my broker a long time ago, how do I know what to buy? And he told me, what do you buy with your money every day? Or what is in your fridge? Or go to your house, look around your house, what do you see? The biggest expense for a Nigerian today, the household, 57% is food. 57% of the average expenditure of any household goes to food. So anything that you can invest in that is food related, whether it's the actual food, the logistics to get to the food, the storage of the food, or who is paying for the pack of the food, you are in good spot. Look at Bua Foods and how much they are making and all that. Many are not quoted, so that's the difficulty. But look at Okumo Oil, right? It's gone to the moon. Look at even Presco, gone to the moon. There are risks there, but food is a major expense, and food is recession proof. It's either you eat or you don't eat. You can't say, no, bring down the price of rice to 10,000. No. It's either you buy the rice or you don't buy. You can't say, I'm going to cut off food and watch DSTV. So food is recession proof, right? That's number one. What else sector should you look at? I used to like petroleum, i.e. the retail guys. But we're waiting for Dangote because Dangote is going to come in and disrupt that whole space. So for now, it's wait and see on that avenue. You don't like banks, so I would say, okay, let's leave banks out of the way. What about the industrials? They were a dead zone before, but now you have Dangote, you have Bua, you have all those guys doing cement. Like it or not, Nigerians are also building homes. We're using cement to build our roads. Because of Dangote cement alone, in the last 5 years or 6 years, I believe, Nigeria was the highest performing stock in the entire world. That's Nigerian index was the highest performing in the entire world because of the returns from Dangote cement alone. It's now a utility stock. You buy it, you get dividends. I suspect Mr. Dangote will take that company private. But I like those kind of companies. They are boring, just make a profit, they pay you a dividend. In Nigeria, dividends are important for you because that gives you some income you don't have to sell. That's just my take. Lunde, do you have any other sectors for him?
Yeah, so I was a bit surprised that the banker had reservation about the banking industry making huge gains, but I really understand where it's coming from economically, and you pretty need to look at the function of banks. They provide liquidity, they serve as mechanism to enhance economic growth in different sectors. But the real sector, just like Carlo mentioned, food inflation is relatively high. Economic consumption policies have been inconsistent, so you see exodus of businesses, you see business coming out. Then insecurity also plays a key role. You look at companies like Guinness, the insecurities did not really affected their raw materials, and at some point there was a correlation at that time, and those stocks remained suppressed for a couple of times, particularly brewery stocks that use local millet. So even if you are weighing on the fact that Nigerians eat a lot of food, the question you ask is what are the margins and what are the opportunities? Because you look at Nigerian stocks, you don't look at Nigerian stocks like I invest in American stocks. First things you look at, three things you look at: what is the return on investment? You look at the fundamental of the stock and what excites the stock. So, for example, in Nigeria, dividend paying stocks really excite investors. Then the banking stocks, cash flow. Banking stocks are very liquid. If you have 100 million naira, you want to cash your bank stocks, it's quite easy. It's difficult in different kind of segments. Then you also look at the fact that the president has been strong on energy reforms, and since he came on board, you see that the energy sector has impressively done very well. So the bet is that when Dangote or NNPC come on board, definitely we are going to see uptick. It looks like the worst is over, though. Tariffs coming in, crude oil prices coming down my way on Zeblat energy in the short mid-term, but fundamentally these stocks are solid. There have been asset acquisition. The president has approved them, no delays. So we have to increase production. And the example is that the energy sector will pretty much keep up the pace. So yeah, good. But food sector, I'm not buying. I'm holding. Nestle has one of the best businesses, but if you look at Nestle stock, it has been as slow as a snail, and pretty much because FPI inflows is quite low, because FPIs really buy the heavyweight stocks like the Dangote, the Nestle, the Zeblat. So if you look at Zeblat also, interestingly, average of for those that are in UK, for example, if you're buying Zeblat in the UK, you're buying 40% cheaper. There's that arbitrage opportunity right now, and I think it will close at some point. So I will not really advise anyone to look at food sector like you're looking at bank or energy sector, because if you look at performance of those stocks, particularly in an environment we are in now, it's going to be looked on quite risky. Cadbury surprisingly has done well in the last few months, but it's one of the eighth out of the moon. So probably you need to understand the fundamental when you're investing in the stock, and that's why I also say read the newsletter of the investment bank or stockbroking firm. When you open a stockbroking account, you get newsletters, you'll be able to understand the peculiarity of the stock and make those decisions based on your objective.
Yeah, and if you don't know what to buy the index. If you don't know what to buy, you can buy the all share index, which means you are buying Nigeria, then you go to bed. Okay, if you don't want to buy Nigeria, you want to drill down more, you want to do top down, you can buy the money market or you can buy the equity, do it 50-50. So you have money market, you have equity index. It's a portfolio, you leave it like that. Or you break it down more. You buy money market, you buy dollar money market, you buy property, you buy equity. So 4 sectors, but all Nigeria. So if you don't know, like to do this individual research is a bit difficult. Buy the sector, close your eyes, move on. If you want dividends, but there's a dividend index for you. I think it's called what's the name? Afri Dividend Index, NGX Afri Index Dividends. Not doing too well now. January it did 7%, then it just crashed in February and March. It's doing 0.70, but there's something there for you. So
yeah, but can just add something. They need to understand that when they're investing in equity index and REIT, real estate investment trust, it's not as liquid. It's not as liquid as what you think stocks should be. Like Carl, for example, the market where Carl is exposed, there are market makers that enhance market efficiency. Here, we are buying index funds. Don't grumble. Just understand that you might not get fair value. When I mean fair value, it might not be at the price you pay for, and you might not sell at what you're selling. Because I have a couple of ETFs that are really doing so well, but selling them has been quite equivalent. So for starters, I usually discourage people that it's better you start with things that are liquid, things that you understand. And when you become more sophisticated, then yeah, you can start on that end.
The most important question you have to ask yourself is, when do I want my money? That's the point. When do I want my money? If you want the money in 10 years, do the equities, right? That's, you consider it, not do consider it. If you want your money in 2 years' time, don't do equities at all, even if it's liquid. So when do I need my money? So TS, I think we've sort of given you a few.
Yeah. So one last thing will be when LNPC goes public, is it a buy? Just looking at their performance.
It depends on how it's structured. If it's that whole company is NNPC at a discount. Don't look at it this way. Is NNPC at a discount or at a premium? What's NNPC's asset today? Is their oil reserves. It's not their refineries. Mm-hmm. It's their gas licensing. So the gas in Nigeria is owned by them, the pipeline is owned by them, and then the reserves owned by them. If I was Nigeria, I would split its company up. I would sell the pipeline company separate from NNPC. I would sell the oil. I would get a company that would own that oil fields. It doesn't have to be sold. It can be something different to raise capital for them. I would sell the refinery, the NAPIMS, different from the other ones. Make 3 or 4 companies from the NNPC you have today, quote them, list them, make them a bit agile so they can then go to the market and then become market leaders in Africa, even in Europe. But if that whole NNPC is just too big and too slow, there are some subdivisions in that NNPC that if you listed today will be multi-million-dollar corporation. That NAPIMS, the guys that do all this, they are very, very good. But NNPC is just too, the headquarters alone, do they need that headquarters? What do they need for? You know, so if those was a business, the private sector business, it's easy. But NNPC is Nigerian Federation. If you touch it, they'll tell you, oh, we are taking our money that was going to go to FARC, things like that. But our company should be privatized, sold completely, 100%. Then just tax the new owner. Give it to Dangote, tax him in dollars. Move on. Move on.
Not allowed that.
They won't, because
to be honest with you, I think the new management appointed restored confidence, you know.
With all due respect to the gentleman, I don't know him. With due respect to him, we've had this story before. Ibe, Kachiko, Obaseki, they are all with due respect to the guy. I'm not hating him.
There's a difference here. So the difference for me is like the timing, the agenda, and why I think it's different. So for me, I'm looking at the fact that these are sellable people that will definitely make foreign investors consider investing. Because I'm looking at NNPC floating between 5 to 15%, just like Aramco initially. I don't think they won't float beyond double digits, up to double digits, like between 5 to 9%. You know, and I think their valuation would definitely be on that, because their valuation will be quite interesting, and I think it will be attractive compared to a lot of people are thinking about. My only concern about NNPC is like their inconsistency with disinformation of information. One problem I have about the industry is like they have one of the worst communication departments I've seen on planet Earth. And because I don't know, we've employed a strategy that I think makes financial market reporting insulting, where you bring in influencers and trolls to pass your messages. Because if you look at over the years, I think NNPC has really been having problems with the Nigerian populace in terms of optics, in terms of relations, in terms of passing the messages. Compared to other ministries, I think it's been horrible. So I think
people don't trust them. And right now, the grapevine is that NNPC is fighting Dangote. And it's a wrong grapevine or wrong news. Even if it's a rumor, we shouldn't be saying it. $20 billion, but they own, NNPC has shares in Dangote, but they quote unquote fighting them.
I think NNPC is going to be a big one for Nigeria. It's just that I hope they really streamline operate. I hope the team really, because their technical has no excuses.
Okay.
I'm expecting to really do well. And
they have our support. They have our support. It's just that we've heard it before. So again, Kevin was here. Kevin was here last week, and Kevin said NNPC can't cross River Benue. The pipelines they are taking from Ajaokuta to the north, they haven't been able to cross the river Niger. They have no Chinese financing. So NNPC is a national. We shouldn't be subsidizing NNPC. No, NNPC says we are subsidizing imports. No, the Nigerian people are subsidizing NNPC. Subsidy is we are the ones paying for NNPC inefficiency. There is no reason why we shouldn't get petrol at a lower price. If NNPC has crude oil, they can refine. They have no refineries that are working. 4, none are working. They have pipelines. The pipelines are not connected in the southeast, in the south, like Kevin was talking about here the other day. We have no gas in the north. NNPC has been in Nigeria for how many years? They haven't gotten these things done. We've had oil booms 2 or 3 times in this period. So I'm cautiously optimistic. I get it, the army was there. But if NNPC ran Nigerian liquefied natural gas, it would have been like Eleme Petroleum Company that they had before. Eleme was owned by NNPC. It crashed. A foreigner came and bought it. Now Eleme is worth billions of dollars. It's the exact same thing that will happen to NNPC. If you bring a foreigner today to this same NNPC, give it 5 years, NNPC will be like Aramco. But then we say, had I known.
NNPC to me is like IBM, and I'll tell you why I said IBM. So I feel like that, you might look at the fact that they really have troubled assets, they really missed the opportunities they had. But look at what they are holding, and look at the fact that Nigeria has about 39 billion barrels of crude reserves. You can't bet against. Nigeria is one of the highest holder of gas. You can't bet against.
By now, NNPC should have been taking. By now, NNPC should have been taking pipelines to Ghana.
In terms of profit.
Before Encore, who will be? Is it me that will be bigger than them? Before Encore,
I know the second biggest company in Africa.
Who will compete with them before? They're a monopoly. Been a monopoly for years. They have the assets. If I find oil in my village land, it's theirs. It's theirs. So how are they profitable? It's my. So again, the NNPC should have been connecting West Africa with gas, so that you force those West African countries to buy gas in naira. In one full sweep, you have solved Nigeria's inflation problem. You've solved our budget deficit. So that means every year, all the West Africans, all the folks that are coming to Nigerian gas will come to Nigerian banks and buy naira. What will they buy naira with? Dollar or CFA. So every year you are getting free dollar, free CFA from West African countries, from anyone else to buy the gas. You pay in naira. So they will come to GTB or UB and say, we have $2 million, want to buy naira to buy Nigerian gas. So every year you are just getting a subsidized dollar inflow, but they haven't done it. West Africa, they haven't done it. Same with gas inside Nigeria, West African gas, everything. NNPC should have owned Africa, owned it. But
they've missed the opportunities, and I think
all right.
Well, there's never a bit on.
Let's get Reef. Reef is there. Let's do Reef. Reef, go ahead, please.
Sure, I don't know if you want to pivot it all to tariffs, but
we're going to do that. We're not just to. I mean, what the heck? I mean, tariffs. Let's do tariffs. So it's important. It's important we lay tariffs before we talk about it.
Yeah.
What's the late?
I prefer just a disclaimer. I think this is a financial space. The politics, let's remove the politics around because
They're gonna get the politics. They're gonna get the politics.
I don't want us to bring the politics around because I don't want to be very confrontational and the space should be quiet because the discussion should be okay. We are looking at financial application, so I don't want to give you the introduction.
That's fine.
If you look at the market, for example, I remember when you were like, was it that bad? I said that Trump really hurt the market so much that 9/11 looks ordinary. And if you look at data, 2 days in the past week was worse than 9/11. Yeah, you cannot undermine President Trump's economic team. He has some of the smartest people, and he's trying to rearrange the free market mechanism. He feels that Americans have been at disadvantage, and he feels that there's a risk where supply chains are in hostile nations like China, which I totally buy. And also feels like, many of these countries has also been fair to America, which largely makes sense because if you look at tariffs imposed by certain countries on America, it's quite high. And if you look at historical data from the Great Depression to the time we speak, US tariffs have been pretty much low. But there are 2 things that confuse me. First, the US is the holder of reserve currency. Secondly, the US has the most efficient market in the world. There is no substitute. So this also comes as a cushion. Now you trying to disarrange the order. At the same time, you are distorting your market because what you've really done right now, if you look at BlackRock data in Q1, $11 billion moved to European ETFs by American investors. The UK fund managers are saying American investors are moving funds into the market. And also, you look at the fact that tiger economies are also expanding their market to receive. So my fear is that if your allies are now merging with your supposed enemies, it brings in a political risk, which I don't want to talk about. But just to cut down the discussion, my fear this week is that I'm just praying because I looked at my crypto wallet just as I was speaking to you. I just let me check it for the day. I didn't even know Bitcoin has dropped below 70. If there's no news this night, my fear is that what's going to happen in the coming days. I think the president of the country, if I was President Tinubu, I think Wale Edo should be beside me and is a petrol advisor. He said that they have to work the economic budget because if you look at our margins from crude oil, it's going less day by day. And the best is that if crude oil should drop by another $10, we are in deep mess. Ignore the theory that by many of these political economists that say Nigeria has reduced their dependency on oil. That is a fact because if you look at the fact why Nigeria's generation from oil has reduced, Nigeria's grip on oil revenue has dropped, is because there have been shortfalls and relying on debt. But we don't really have anything that is giving us the FX like oil. So that's my take on it.
Okay, Riff, don't worry, you will speak, but I want to just give folks that are listening, it's good to talk about the history of this whole thing. Tariff is not really a financial thing. Let's go back to 1945. 1945, the Second World War had ended. Europe was completely destroyed. No economy in Europe. Italy, Germany, France, there was nothing, literally nothing. So in 45, 2 things happened, or in 44, 2 things happened. Number one, the World Bank and the IMF. And of course, the US had the gold. So US said, number one, our currency would be the global reserve currency. What does that mean? That means that Italy had no currency. The lira was worthless. The German mark was hyperinflated. So we would allow you to trade with the US dollar. So what would happen is West Germany would come to the US and say, we want to buy oil from Nigeria. West Germany would borrow dollars from the US Fed, pay to Nigeria that US dollar, because Nigeria will not accept West German marks, they are worthless. Then Nigeria would accept US dollars and sell crude oil to West Germany. So that's how the dollar became the global currency of settlement, together with the petrodollar. Because there was no dollar in Europe, there was not an economy in Europe, only America. And remember, there was a Cold War. So that's currency. What about trade? again, Italy, France, Ireland, all devastated. So the US said, we would allow you, because tariff is a tax on imports. So when you tariff me, my people are paying. When I tariff you, your people are paying. Okay, US said, we will allow you, Germany, Italy, and France, to impose a higher tariff on us so that you can raise money and build your economies. So the US will tariff France 2%, but France can tariff US 20%. They all said that's fine because France needed that money to rebuild an economy that was broken. This was 1944, 1945. Now we have moved on till 2025. Let me read you the budget of America. This is the actual, not the budget. America in 2023 brought in 6.1 trillion. Sorry, brought in 4.4 trillion. That year, America brought in 4.4 trillion. In the America's budget, there's what we call mandatory spending, which is social security and of course healthcare. You can't touch it. Even Trump cannot touch social security or Medicare. He will lose the election. No one can touch it. So anything that is going for social security, that is going for Medicare, is what we call mandatory. Mandatory spending in America is 3.8 trillion. So total inflow, again, 4.4 trillion. Medicare, Medicaid, what's the other Medicare, are 3.8 trillion, which means that already the total revenues America receives has gone to Medicare, Medicaid alone, and you can't touch it. Then where's the other money go to? Interest. Interest payments in America today are more than defense spending. What is America spent to pay interest on its budget is more than what it pays for the defense. And we know what America's defense is about, 843 billion. America is paying more in interest. So what am I saying? America is broke. America is broke. And if your country is broke, what do? You either cut down spending or you raise taxes. You either cut down spending or you raise taxes. You can't cut spending in America because you can't touch Medicare, you can't touch Medicaid, you can't touch what they call the mandatory. So what else do? You have to raise spending. You have to raise revenues. How do you raise revenues? They are Republicans. They're not going to raise taxes. So what do? They are going after tariffs. What is a tariff? A tariff is a consumption tax. The same tariffs, Democrats, Republicans have supported it. As at 1913, America had no income tax. America's government got its money from only tariffs. There was no IRS. IRS was invented because the American folks said, okay, we're going to have a grand bargain. We'll allow you to tax alcohol. In return, you are going to ban alcohol, and to replace the revenues you're going to lose from alcohol, you can tax income. That's how they have IRS, because of alcohol. Alcohol was the number one thing. They take away alcohol, you can tax income. So fast forward to Trump 2025. He has inherited an economy that is broke. The economy is completely broke. So tariffs are revenues. He's got to raise revenues from somewhere. So he's doing tariffs. Now, are they organized? Is it we're taxing penguins? We're not taxing penguins. But it doesn't take away the central fact that you have to do two things. Either you cut revenues, you cut expenditures, or you raise revenues. And both have to happen. That's what's going on. That is exactly what is going on. And we can argue the politics of it.
You not spoke about now. Look at the market, for example. Now, look at the market now. Sellers wiped.
Sure.
Market contagion.
Sure.
Gold.
Sure.
I was telling a friend that for gold to be down $200 in 3 days is telling me that investors are even selling their hedge.
Okay,
investors are selling their hedge.
Give the other side, Olumide. If stocks go down, what also goes down? What?
Everything.
No. Bonds go up. When we start Olumide, if I have $100, this is fact, Olumide. If I have $100 in no, you are saying Kalu, but this is what is Trump trying to do? Trump, they need to pay 5 trillion interest on 5 trillion. They need to pay that money. How are they going to pay 5 trillion when interest rates in America are 4%? They can't afford it. They cannot afford to pay interest on the maturing debt. So what do they want to do? They want to force people. They want to force people like Olumide to sell his shares. If Olumide sells his shares, what happens to the stock market? It crashes. But where does Olumide take his money to? Olumide take his money to the bond market. Olumide goes to the bond market, bond yields fall. So the US government can refinance their bonds at a lower. That's what they're doing. It's on purpose. This stock market crash is on purpose.
Yeah, but is it working? I'll tell you why it's not.
Yeah, of course it's working. Is the market not down?
Okay, let me explain why it's no way. It was temporary. I'm giving a weak spectrum now because I'm looking at a weak spectrum. Canada is saying that we are not even putting money in US bonds again. So we want to put money in gold. Just US that
gold. They don't have enough gold in the world.
I'm just telling you, I understand where you're coming from. I don't feel the US position being threatened. But I'm telling you the optics, I'm telling you the contagion happening in the market. Yes, I get what the president is doing, and I understand the correlation of the 10-year yield with the Fed's interest rates and the cost of borrowing. I get it, Carlo. But the average retail on this space, what is really concerning now is, man, my Tesla has lost 50% in a span of 8 weeks. What is really happening? And now everybody talking about Black Monday. Can you be sophisticated? You have a edge. You are in the most powerful economy. You really have a little problem. You can't compare yourself with someone.
My 401k, my IRA are all invested here. I've not looked at them. I know they've crashed. I haven't looked at them. The point I'm making again is this, Olumide. The risk is the bigger risk would have been if America said, look at let me tell you, all of you listening there, just Google what I'm telling you. Go and Google the correlation between the Federal Reserve spending money and the stock market. Just Google it. Let me just make this point to prove. Let me just make the point.
I'm not arguing about your I'm not arguing about your facts. They are correct. But the problem here is that I'm telling you that this is not what we are looking at in this part of the world. And this is not what people are looking at.
He's the president of America. He's not the president of Nigeria.
We are looking at the fact that we are looking at the fact that crude oil, like Trump's drama, has caused crude oil to lose.
Crude oil is exempted. Crude oil is exempted from tariffs. Olumide, you
can exempted for tariffs, but crude oil lost $11 last week. And this week now, it looks like it's set again because it looks like a gap is forming. You know what's happening to Bitcoin as we speak, it's melting faster than spirit.
Yeah, I want you to let me make this point. And I want you guys to Google the Federal Reserve correlation to the stock market. I've posted it from the tag. I'll post it again. If you want to know what the stock market will do tomorrow, look at what the Federal Reserve will spend. That's the amount of money the Federal Reserve is spending is directly correlated to the stock market in America. So what am I saying? Let me speak English. America's stock market used to return 5-6% every year. This is from 1800s, right? 1870, 5-6%. In the last, I would say 15 years after Obama, or from Obama till date, it's been returning 15, 20, 5, 11. What's happening? Obama brought what we call the quantitative easing, which means you simply print money. When that money was printed, that's what correlates with all these tech companies you see today. They got cheap financing. They get cheap financing. You can do Nvidia, you can do Meta, you can do Google because you are taking risk. You are investing in a service, right? So the Federal Reserve's free capital allowed the American economy to borrow cheaper, to take risks cheaper, and to invest. If you pull up the chart, direct correlation. Federal Reserve balance sheet and the stock market. All Mr. Trump has done with Scott, and they said it during the campaign. They said it over and over. They have simply stopped the free money. They just stopped it. Once they stop that free money, you see the stock market is reacting to the outflow of the free money. But the question is, I'm asking you this: Nike, do one stock that was up this week? Nike stock was up.
Yeah.
Did Nike sell more shoes or sell less shoes? No change. But Vietnam and the US are talking, and they want to do zero tariffs. So investors are saying if there's zero tariffs, then Nike shoes will enter America for free. This is the point I'm making. The stock market is not the economy. The stock market is not the economy.
You are speaking like an American, and I get it, and I understand those views nationally. But we are talking from an investor's perspective, as people that we're not participating in the market that see. Trump's drama has distorted global order.
It's not drama. He has to pay the bills. Nigeria. So when we had Shagari, when Nigeria had Shehu Shagari, right? Before Shehu Shagari, we had the oil boom. We had a lot of money. Then we now had Shehu Shagari, and when Shehu Shagari came, we could not pay our bills. Then what happened? We had a coup because there was economic issues. The coup came in to stop that IMF thing happening. We had a coup, we had Buhari, then we had IBB. What Nigeria suffered with IBB, Buhari, Abacha is because we refused to do what Mr. Trump is doing today. We tried to keep our lifestyle without going into what we call an austerity. That's what he's doing. If you don't do it, somebody has to do it. Somebody has. Okay, let's not hog the space. We have a lot of guys. Let's not hog the space.
I just want to just to tie down. So I'm looking at the fact that crude oil prices will be on the naira, and I'm also looking at because the Nigerians are really looking at what is in for them, not the politics behind it. And I feel like this is a time for us.
It's an opportunity for Nigeria. I saw Ethiopia.
I don't see an opportunity.
I saw a tweet from the Ethiopian, I think it's a minister in Ethiopia. They are saying, wow, they are going to export to the US at 10%. Asians are going to pay 30-40%. So Ethiopia is saying that they are now rejigging their economy to take orders from Asia. They are being smart. They are saying this is an opportunity for us because Africa has AGOA, African Growth Opportunity Act, which means that Africans can export to the US at a lower tariff. Africans have it. Ethiopia is already packaging itself. So we have to take advantage. Then create the base. Whose fault? Is it Trump that will build Calabar as a base for you? Whose fault? Whose fault did Nigeria not build up an export base? Whose fault? Is it Trump's fault? We didn't prepare ourselves. Then the rain came and we said we want to buy an umbrella. Ethiopia has got miles and its clusters of export goods. Madagascar, Rwanda, Namibia, they're all ready. What were you doing?
Yeah, but because Trump is doing America first, and you're saying that he's trying to mend his country's economy. Because we didn't do our homework, supposedly we should suffer the global.
That is how exactly the world works. Lagos State has built a deep sea port. They built a light rail. They are investing in roads. So other states that didn't do their work will now come and take Lagos State VAT. That's what the argument you are making. Lagos State did deep sea port. Now Lagos State is the number one destination in West Africa for deep going cargo in the whole of West Africa. The same way Ethiopia has invested in Chinese-built export clusters. Same with Rwanda, same with Madagascar, same with Namibia, same with the Ivory Coast. Tunisia and Morocco are exporting cars to the EU. Now, those same countries are going to now export cars to the US because BMW will come to Morocco, do their cars in Morocco and export to the US because they have built their economy over time. Nigeria did nothing. We have no railway in Nigeria from the east to the west, and now we are complaining, we are blaming Trump. We have no power supply. We have no power supply. Whose fault? We can't blame Mr. Trump.
So, Kalu, are you saying that we should take him to suffering while he's mending the US economy? Because it means that
why did Lagos State build a deep sea port? Why? Because of trade. The foresight of Lagos State government over the years built a deep sea port. Why has Akwa not built a deep sea port? Why is Tinapa damaged? So again, you can't blame anybody but yourself. Trump this tariff thing he has been saying it since 1987. Go back and pull Mr. Trump's this up. During the campaign, I watched politics. He was saying it there. He's going to impose tariffs.
Yes,
So why are we arguing?
I don't think.
Let's get.
I don't think we should fault another president for trying to optimize his own economy. For that to, how would I call it? Though people may see it as selfish, it should be America first. It should be Nigeria first, according to a Nigerian. And it should be Ghanaian first to a Ghanaian. So the president or the Federal Democratic Council should call for urgent meeting or a think tank. How can we maximize the present reality? That should be everyone should be taking about. What can we do?
Let's get some guys. Yeah, engineer, I agree with you. Let's go around. TS, you've spoken. Hold up, let me mute. See you. Go ahead. See you got the floor. Let's get folks. I don't want to monopolize the mic. See you got the floor. Go ahead.
Yeah. So I'm listening to what you've been saying, and 100%. So when you talk about trade, I think with the tariff issue, in my opinion, because I've written a lot about it, the tariffs are for two reasons, in my opinion: revenue raising, and then protectionist policies. So now the issue is, in my opinion, we've been in a situation where, like, for me, there is nothing. I don't believe in the concept of free trade, because all over the world, countries do have trade barriers, non-trade barriers, all those kind of things. So that's one. And second of all, why are we doing these protectionist policies? Look at China, for example. China's business model or investment model is skewed towards exports. So you're in a country where you have 40% of consumption. In other countries like the West, you're seeing 60-70%. That is where you then get some of these trade imbalances, and that is where the frustration is coming from. China's exports economy has really hurt global economies, and not just the US as well. So that's where it is. Second of all, Carlo, I heard you talk about revenue raising. If that's the case, if they're using tariffs as a way to raise revenue, I don't really think it's an efficient model to raise revenue. And that is why, for example, all these things are pointing towards the extension or making the permanent the tax cuts. If you look at a graph, right, if you put revenues and income tax, if you look at the revenue as a percentage of GDP, it is relatively flat. And then if you look at income tax, it's really skewed all the way up, right? I don't know if I could post it here. I'll probably do it some other time. But that is what I'm trying to say. The revenue is that a tariff as a revenue rate is not efficient, because you need to have the tariff rates high enough. Am I against tariffs? No, I like it. I think it's good to reorder the global economy and financial system. But people need to understand that if you put a tariff at that rate, it's a shock. It's a major supply and demand imbalance, right? Second of all, what are the consequences of this, right? In my opinion, I look at it in two ways. So if US is weaponizing trade, which they're doing, what are these other countries going to do? They don't necessarily have to retaliate. I think if you retaliate...
Wow. Sorry. Okay, wow. Okay, let me ask you a question. The US and the entire world had a meeting and passed a 10% minimum tax. Only two countries didn't sign, and I praise them: Ireland and Nigeria. Are you aware of that tax? 10% minimum tax across the board. Are you aware of that tax, correct? 10% minimum tax. Nigeria did not sign. Ireland did not sign. What's the difference with that tax and a tariff?
A tariff acts as a consumption tax. So what I'm busy trying to say is that...
No, what's the difference? What's the difference with that global tax and the tariff that Trump has done? That says anywhere you are, that tax says anywhere you are on earth, once you manufacture a product, you would pay 10% tax. Nigeria refused to sign. And I wrote about it because what they were trying to do is this. They were trying to take away the advantage of Nigeria. So companies move to Nigeria, Nestle move to Nigeria and do Nestle Nigeria, make Cerelac and export to, say, Mexico. US comes and says, Nestle Nigeria, they're going to add a 10% tax. Not in addition to Nigeria's tax, so they will pay an extra 10% tax, which means that they now make the cost of Nestle Nigeria to go up by 10%. So they can now compete with Nestle Houston. Nigeria said, no, Only Nigeria and Ireland refuse to sign. What's the difference now? You say weaponizing. You started by saying everybody pays tax.
No, what I mean by weaponizing is that the world, I don't see it as weaponizing, but other people will say, okay, if you're weaponizing trade with us and the rest of the world, then what are the consequences of that? In my opinion, if you retaliate, you're stupid. Because the best thing to do in a tariff like this is to stay calm. If you retaliate, you're going to inevitably, raise prices of goods and services in your country. Yeah, but long term, I think the tariffs are going to be deflationary.
Okay, so
disinflation.
I think that Trump's target is 10%.
Are you saying China is stupid for 4%?
If you retaliate, you're not sensible because if you're in if you retaliate in this,
so are you saying China is stupid? No, I just want to get that clear.
Yeah, China's strategy. I can argue. China's strategy is wrong. China already has tariffs on the US. Then the US retaliated to China. Then China retaliated. So where does it? Who first put tariffs on who? Let's start. Who put the tariffs first? And I can share it again. If you pull up the tariffs, America was charging China 2%. China was charging America more. Then America went up. Then China has now quote unquote retaliated. But who put the tariffs on first? That's China. So what? How's retaliation? Canada. I leave it. So Canada, Chinese.
Who created the order first? America created the rules. You understand? And countries worked around the rules. You have the reserve currency. You are the home of finance. Countries put their funds in the treasury market. You can't have it all. Let's be honest here. You can't have it all. That's what is making everybody angry. That's why you guys are saying
this is why this why I started from 1944, because many people are looking at tariffs from 2025. You have to go back to the genesis of how America allowed tariffs. Tariffs were a subsidy to Europe. China, when China joined WTO, China was quoted as a developing nation. That's why China was allowed to tariff the US. When China joined WTO, they were not as economically advanced as they are today. So in the W Trade Organization, China is listed the same way Djibouti is listed, developing country. So America says, no, this is wrong. China is now the second largest economy. If you do PPP, they are larger than America. You cannot allow them to tariff us as a developing nation. WTO says no. So America now does what they call favored nation status, and they now penalize China for currency depreciation. But we have to start the story from the beginning, not from 2025. Please go ahead, sir. Take care. See you. Real quick, I want to get us to speak. See you. Nelson, go ahead.
Okay, thank you very much, Carlo. I must thank you for taking the pains to elucidate this history and to paint an even bigger global picture. What is happening to the US is not unique to the US. It's a general stuff for the entirety of Europe. It's just that the government in Europe have not faced it. If you just do a little research, the average debt to GDP ratio across Europe is between 80 to 120%. So it means that the fiscal headroom is simply not there, and the tax rate in some of these countries is about 35 to even 40% in some cases when you add both state and federal taxes. So what that means is that these countries are already in debt, they're maxed out in debt, and they don't have the apparatus to raise more money to pay to meet their debt obligations. US has a similar problem, but not as bad as Europe. Trump, yes, they have the reserve currency, but the reserve currency is not helping them because the more you print, the inflationary regime catches up with you. And eventually, if other countries choose not to use your currency, you are doomed. So having the reserve currency is a good thing to have, but it does not protect them from the effect of that stupidity. Now, for those who are complaining about the stock market, let us tell ourselves the truth that we are looking at growth versus development. What Trump is going after, if I understand correctly, is development to build the competitive base of the manufacturing base for the country, because it is currently in the hands of the enemy. China is an enemy not just from a trade perspective, but from a political economy perspective. They are not singing the same tunes, and you cannot allow your enemy to be the manufacturing base for your economy. Now, that said, we cannot control these developments. Our question is, what can we do? What should be our response? 2 years ago, I was in Korea. We met a firm that was willing, a Korean firm that was willing to bring a shoe manufacturing facility to Nigeria to produce. They were employing 250,000 persons, simply because our labor is relatively cheaper. $200 per month is fair compared to what you have in Vietnam, $300 to $400. So the question now is this: what are we going to do to, if possible, begin to take some of the light manufacturing industry that the US will never be competitive at? Because I don't think their goal for attacking China is to start manufacturing shoes and clothes in US. No, those are low-hanging fruits. The big ticket items are the high-end industries. So this whole war is two elephants fighting. We need to pick the low-hanging fruit, which is what Ethiopia is trying to do. And that should be the priority of our focus. And for investors, we should find those small firms or emerging small firms, who are, tapping into that space. That Dangote refinery is a good idea of what Nigeria should focus on, not just the refined petroleum itself, but the other byproducts of that refinery, the plastics, the other chemicals, which is where, a lot more value can even be added beyond the typical petroleum. So that said, we should look beyond what the stock market is, how the stock market is responding. These are propped up economies that have been propped up for many years. These stocks, especially US stocks, have been propped up for many years. If you check the average returns per stock price, you can see that the margins show that it's just because there's too much money in the economy, not because the stocks are really creating more value for the shareholder. It's just capital appreciation. So that said, it will drop, yes, but I think Trump and co are willing to pay the price, and it's a fair price to pay. Thank you.
I think as well. So that just to make the point, stocks, there's Snapchat, Meta, they make products, they are making profit, they are the economy. That is fantastic. I think the point that must be understood is this: America is broke. If you look around, they brought Doge to do efficiency, to cut government with our own Orasian report. That's what they are doing, to cut the waste. This tariff is a revenue generator. And like I've said, I asked gentlemen I spoke before, when Biden was the president, the entire world got together and passed a 10% minimum tax on all nations, whether you like it or not. That was a tariff. Did we sign up for it? But they passed it and nobody complained. Trump, I believe, is going for 10% global tariffs. That's what I think his target is. The 40% was to force people to go and negotiate. I hear now Vietnam, I'm watching the news now, Vietnam has come to the US and said, we want 0. Don't give us 10, give us 0% tariffs. We won't charge you, you won't charge us. Same with Israel. I hear Argentina is also working to do zero tariffs. India is doing 0%. I think his target is to have 10% across the board. But if
look at it this way. See, nobody's arguing about Trump is not trying to wake up America's industrialization, which to me I think is late, but he's trying to wake it up. But look at it this way: you are bullying Canada. At the same time, you're making the Europeans look like so. Because see, Carl, you are in America. You don't really know how the outside world is taking this. And
yeah, but the man doesn't care. You keep making this point. The man is elected by Americans. That's the point you keep on making. I'm a Nigerian. But the guy, he's elected by Americans. It's the same way if Tinubu came today and says, Dangote refinery is in Nigeria. If Tinubu comes today and says he wants to protect it, I'll now say, oh, no, Tinubu, let's worry about Angola and Sudan. No.
America, this economy, global economy is built on free trade, right? And you are trying to write it. Oh, no problem.
But how can it be free trade when everyone is tariffing just America?
I understand what you're saying. But see, it's going to come at the price. The solution here, I'm just saying, it's going to affect something. It's going to affect the market. And for me, I think it's very scary.
Trump is a bully. He's a brash guy. He's uncultured. He doesn't speak well. He's all those things. I agree. He's not very subtle. Somebody else would have done the same tariffs in a very, very subtle way, got the same result. But this is who the guy is. Well, is anybody surprised of how he tweets? Are you surprised maybe that he's how he tweets? If you are surprised and you just woke up today, this is the man. This is the guy. This one.
I wanted to speak like an American. I want to speak like an American now. Yes, theoretically and most likely experimentally, everything Trump is doing or intends to achieve looks good. But I don't mean to throw jab at anybody here or any APC person here. He's acting like Tinubu, the same way Tinubu did and remove subsidy. Just said subsidy is gone and it's gone. Acting, I don't want to use big words, but if your intention is to balance trade for America, in which you know that you are going to tariff almost all the country in the globe, why do you start by threatening Mexico, Canada? Now, where I'm driving at is Mexico brings in a lot of food into America, which effectively reduces food inflation in the country. Canada, on the other way, supplies America with a lot of rare earths and critical minerals that powers the industry in America. If your intention is to also, based on what he said his agenda is to kind of reduce balance trade and then heal the broke country. You know this your goal, for you to achieve it, you are going to hurt people, because by the time you start tariffing countries, your consumers are the one that will pay the tariff. I like to state it like
that.
Okay,
let me do this.
So why then do you start with Mexico and Canada? Then let's start with
Tinubu's comment. Tinubu, when Goodluck was the president, was against subsidy removal. He sponsored people to go to Ojota, they paid them, and people stopped the removal of subsidy. Then Tinubu, as the president, now says subsidy is gone. Go back to Donald Trump, 1988, under Oprah Winfrey. He said it there. What he's doing today is what he said in 1988. So the man has not changed. This is just maybe the way to do it, but he has not changed. Let's come to Canada and Mexico. The target in this entire tariff is China. Vietnam, Canada, Mexico, they are in the way. The target is China. Now, when you go to Canada and Mexico, there's something called NAFTA that was now made USMCA. What China did, when America signed NAFTA, China was not a huge exporter we have today. So they signed NAFTA, perfect. They created a free trade zone between Mexico and Canada and America. China then went to Mexico and built factories in Mexico to then export motor parts and motors into the US. So if you tariff China, you're wasting your time. They just come to Mexico and a lot, and maybe Canada, and just import the goods, not the car. Remember, they make the car parts in China, ship the car parts to Mexico, then American chassis drive on train from America to Mexico, and Mexico workers assemble the Chinese parts on American cars. So it's an American car. This is the loophole that Trump saw and then did USMCA. He did that USMCA, but it still didn't stop China. They've gone a few wrap around and they've come back again to the US. So now Trump is using the excuse of fentanyl to say, no, we have to come back and renegotiate USMCA. What they want to do to add something called country of origin is exactly what the African Continental Free Trade Zone has. Nigeria refused to sign the African Continental Free Trade Zone because Nigeria argued, same with Mr. Trump, that China will simply come to Benin Republic, build a factory in Benin Republic, and import goods from Benin Republic to Nigeria and kill all our industries. So African Continental Free Trade Zone included what they call origin status, which means that even if you have a factory in Benin, if you don't get the goods from Benin or have a high local content from Benin, we will tax you as if it's coming from China. That's what the African Free Trade Zone did, which is exactly what Trump is saying. So Trump is saying, if you bring that car from Mexico today, if that car is inspected and it has a certain proportion higher than what you make in Canada or Mexico, we will tariff it 25-40%. It's perfectly legal. Again, this is, I think let's not go there. But what you are saying is what other countries are doing. You can't take a car to China today and import a car to China today. They will tariff your ass out of China. The same way.
China, Japan, and South Korea, they've done reform when enemies and friends of the US.
What will the current do? They will no longer export to the US. I mean, US is saying. What will they do? No longer export. See again, look at the numbers. When Trump says you have no cards, he's been arrogant, but he's been correct. China is an export economy. Without exporting to the US, their economy will not function. If they tariff themselves, China will run out of goods to tariff in America before America runs out of goods to tariff in China. Walmart is China. The entire Walmart is China. How many goods are sold in China, American goods? How many? Boeing, Ford, what else? So they will run out of goods first. So Trump is using, he will call it bullying. But it's the exact same way when you go to an employer will tell you, I want to pay you this and I want you to resume on Monday. You have no cards. So you go in first of all, and Ethiopia, again, Ethiopians are Africans. They are also tariffed like us. They are saying, listen, this is 10%, but we're going to use this 10% to now export more to the US. We will pay the 10%. A long time ago, a guy came to Enugu State and planted pineapple in Enugu State. He's from Mexico. If he exports pineapples from Mexico to EU, they tax him. So he came all the way to Nigeria, planted pineapples in Nigeria. He's exporting his pineapples from Nigeria to the EU, no tax. Exact same thing so for us to be arguing Trump, he is American, leave Trump. Let's talk about us. What can we then do as an investors here to then take advantage of what Trump has done? Go ahead, sir.
Hello, Carlos. So, first of all, I think you are running on a lot of old information about the Chinese economy. First of all, China is no longer the export economy you think it is. In fact, there is someone literally just tweeted something about the numbers, and I'm reading it verbatim. China's exports are 19.7% of GDP, down from 36% in 2006. US is at 11%. Japan is at 21.8%. Israel at 30.6%. The UK at 31.7%.
The maths. No, don't wait. The maths fail you. If the Chinese economy has grown, then the GDP will fall. It's math, denominator, numerator. If your GDP was 100 billion,
that's actually not what's going on.
That is exactly what's going on.
The world average is 29.3%. Now, that is to one side. That's to show you that it is no longer the export juggernaut that you.
No, it is now. I mean, we're not.
Secondly, you are talking about. So you start your trade argument or your trade history from 1944 during the Bretton Woods era. You, of course, will not talk about 1890. You won't talk about 1930. What happened in those periods? You had, again, a Republican administration. In 1890, McKinley, they brought in lots of tariffs. Within 1-2 years, they realized the whole thing led to inflation and what? The Republicans, of course, lost the presidency, the House, the Senate. In 1930, because they had a really bad recession in 1929, the next year, Republicans brought in a bill to jack up tariff rates. What happened? The economy even got weaker to the extent that it literally bankrupted a lot of companies that would otherwise have survived a pretty bad recession, actually got bankrupted. 4 years later, or about 4 years later, when FDR was in office, FDR actually had to rescind a lot of those tariffs because it got so bad that a lot of American exporters could not export. And in a way, people even say that is one of the things that led Germany to the hands of the Nazis. Because Germany had a lot of debt from World War One. And when they could no longer sell into the American market after the Smith-Hawley tariff got in, people got radicalized in terms of the politics. The German economy collapsed. Now, you are talking of 1944. By 1944, tariff rates had already dropped significantly because of the like-for-like exchange that FDR did. Tariff rates dropped within 4 years afterwards. This point you are making about taxes and all of that. The truth is that even Trump doesn't believe that. The thing is, if America should tax on its imports at even say 20%, it will not be able to plug the over $2 trillion gap. It will not even be able to raise up to $200 billion out of the $2 trillion gap that the US government is actually facing. Let's be talking numbers here, not simply just saying, oh, we are saving this. On the issue of is protecting American jobs, I know it will lead to more manufacturing and everything. Let me give you a very good example of how difficult and how wrong-headed that argument is. So a few years ago, you had BMW that wanted to relocate from one state, I think it was from South Carolina or North Carolina, down to another southern state. That was a right to work state. This took BMW, so not BMW, Volkswagen. It took Volkswagen almost 12 years to do it. So the idea that somehow supply chain will just change because Trump from Washington DC has said, we are going to increase tariffs to this and tariffs to that. It's not going to happen.
Okay, so we have to move.
That you're making about China. Your argument.
Okay, so because we just can't let you talk, I let you speak. So let's just we can move. So lots of great points there. Let's start with the first one, the Smith-Hawley Act in 18. So again, you are talking about 18. There was no China back then. There was Europe. There was America. The Tariff Act was passed. America had the Great Recession. So you cannot even say if that Tariff Act worked or did not work. The recession came after the tariffs were passed, not before. So whatever we have then, we can't measure it. Again, there was no China. Go back to 1930s. What America is doing to China today is what America did to Japan in the 1930s. Japan was a growing power. America surrounded them, refused to allow them to grow. That's why China invaded Manchuria and wanted to invade Indonesia. Back then, what we called Indonesia was the Dutch Indies to get their crude oil. That's why they had to come and bomb Pearl Harbor. The point I'm making, sir, is this. America's DNA says that no other country will be greater than them. Trump didn't write it. It's from their very, 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 very first principle. Please allow me to speak. From the very, very first principle, that no country will be allowed politically, economically, or militarily to get bigger than them. They went after China. They went after Japan. They went after Nazi Germany. They went after Japan. Now they're going after China. It's not a Trump thing. No, let's take that Smith-Hawley thing out of the way. Remember what I said. Income taxes are brand new in America. As at 1905, there were no income tax in America. Americans wanted to ban alcohol because states were getting revenues from alcohol. So the only way they could let the states stop taxing alcohol is to say, okay, state government, go ahead and tax income, but don't tax more than 3%. Tax only at 3%. Then replace tariffs with personal income taxes. That's where we get personal income taxes from. The America you see today was built 100% by tariffs. Let's now come to the point you're making about China not being an export juggernaut. The Chinese economy today, by PPP, is larger than America. So when you say 16% of 10 or 16% of 1,000, which is larger? China's economy is larger than America. It is driven by export. They've got 3 trillion in reserves in China. They buy dollars to artificially keep the yuan cheap to allow them export to Walmart. Walmart is the Republic of China. Name any company in China that America sells goods to the way Walmart carries American goods. Every store in America is a Republic of China. Low income goods, shoes, socks, hangers, low income. But that's not what Trump is after. Trump, like someone has said, they are after the high value chips. Have they not stopped Netherlands exporting chips to China? They have. ASDL can no longer export chips to China. They've stopped the phone company, right? From the phone company, Huawei, arrested where? In Canada. So they are coming for China. All these things are distractions. They want to raise revenues, but their core mission is to restrict China. And where you see Canada coming, we can make the abuse, but China went to canal, they took Panama Canal, so Trump went there. Greenland, the same thing. They want to come to Greenland, same thing. Look at China, this all makes sense. So let's get someone to speak, sir. I let you speak, I hope you don't mind.
The thing is, the anti-China sentiment in the US is very strong, but really you can't stop China at this point. This is a country that...
Now, I'm not arguing for or against. I'm just giving picture.
40% of its economy every single year. The US invests what? 20%.
I hear you.
You can't compete.
But I'm not arguing that. I'm not in America. I'm not arguing that. I'm just giving color to the fact. When you come and say China is an exporting juggernaut. The largest economy in the world today is China. Largest exporter in the world today is China. They are an exporting economy. China, Germany, these are the largest economies in the world. They export. That's what they do. We can't change that fact by quoting GDP numbers. That's what they do.
This is actually fact. This is not your perspective. This is fact.
But I'm also giving you facts. If you pull up largest exporter, it's China.
So don't worry.
So there's no need to say don't worry. I didn't. So if you pull up the largest exporter, we all have Google. Pull up the largest exporter in the world is China. It's China. Pull it up. Google.
It is the share of its economy that
because the economy has grown. So it's the mathematics. Again, sir, it's the mathematics that I'm trying to explain, sir. 10% of 100 is 10, right? What is 10%? If the base expands, 10% of 200 will fall. So your share of exports would fall, not because you're exporting less, but because your denominator has grown. The economy of China has tripled or quadrupled. So you can't use the same number and say because the GDP to export has fallen. No. Again, Walmart is the largest employer of labor in America. This is America. Walmart. You can count the goods that are not from China in Walmart. Name the corresponding country in any part of the world where you have a store where the entire goods in that store are imported. Name any country on earth where that occurs. Any country. Anyone. Give me a name.
The thing is, Carlos, I actually agree a bit with the tariff argument. It's just that the argument people are using is not a very smart one.
It doesn't have to be smart. It has to work.
It has to do industrial policy, which is what some people in the administration want to do. There are better ways to do it.
No, my brother, they have to pay 5 trillion this year. So it's immediate. They have to pay it. So this whole thing.
It is not from tariffs that
but Cleo, hold on. What they want to do is to cause the market to crash so that bond rates will fall. That's how they pay the deficits. There are different things happening. There's the tariff angle. There's the stock. Lumine is talking about stock market. If the stock markets come down, the yields go down. They can pay their debts cheaper. That's what they are doing also with that. Let's move on. Let's get Bonafide. Bonafide brand. Thanks, Kilo. Bonafide brand. You got the floor. It's not ready.
Yeah. I can really say that I enjoyed the discussion going on. Where I requested the mic was that basically interests me how to capitalize the tariff and see how we can leverage and make money or make the tariff, looking at it, how it's affecting the global economy. We here as in Nigeria, how we can take advantage of it. To be able to make money.
Again, thank you for bringing us back to ground floor. If you ask me, if I was the president today, I will declare Cross River State, a tax-free, zero taxes in Cross River. And I'll ask them to target America. Zero. Now I mean zero taxes, no state, no federal, no local government. On the condition is only for FDI. Only for FDI. Let me tell you, whether Trump goes or comes, you see this thing he has started, it's not going to go away. Trump imposed tariffs on China. Did Biden take it away? Did Biden remove the taxes? No. Before Trump imposed taxes, George W. Bush imposed tariffs on China. Clinton imposed tariffs on China. Obama imposed tariffs on China. Trump imposed tariffs on China. Biden imposed tariffs on China. Trump again has imposed tariffs on China. This is not a Trump thing. They want to corral China. So if you are Nigeria, you want to say, we are nearer to America. We just have the Atlantic. China and America want some product. They don't like Mexico because of all this thing with China. Let us build an export state, a state dedicated to export. So you go and build their railways, you give them gas power, you build manufacturing clusters, and it's only for export. It won't enter Nigeria. So let the Chinese people come to that export cluster, do their textiles and export. It should not enter Nigeria. That's what we should be talking about. You will employ thousands.
It will take at least half a decade.
But that's what I said. Yeah, but Clinton was the president half a decade ago. Clinton imposed tariffs on China. Obama imposed tariffs on China. George W. Bush imposed tariffs on this. This is 20 years ago.
Carlo, the reason I took personal from you, sorry, because I think other people want to speak, but I'll be very brief. The only thing I took personal from you was like, you really cared less about the impact it has on crude oil. And yes, I understand the fact that
I'm not taking sides. People are listening to us to say what's going on. What I'm saying is I'm explaining what is happening. I don't see. I lost. If I lose money in the share, I won't come and say I hate that share. Crude oil is, like you said, it's a number one export earner, but people have to understand what's going on. Crude oil is also not tariffed. That I was scared that they're going to tariff Dangote because I don't know how we'd go and negotiate with Trump if Tinubu was going to go and negotiate with Trump. So I was very, very happy that Trump did not include oil and gas in tariffs. So Dangote's exports are safe for now. So I was happy.
The margins are down. Margins are down.
We knew this now. Did we think that crude oil would remain at 70? I've held spaces here. Olimbe, you've been an investor for the spaces here. Where we said, has Nigeria been, if crude oil goes to 50, can we survive? So,
but you know, Minister of our budget benchmark is on 5.
Olimbe, what is your point? But
my point here, we knew that oil prices would get lower, but now it's moving faster, it's melting faster than
it's your government that is borrowing in dollars. NNPC has sold forward sales of how many billion? Who is it Trump that caused that one? Your government did it. They've sold the oil of tomorrow. Cost them money today. Where's the money today? Where's the money? What is the money for today? Show me one project. Okay, we're doing Coastal Road. Should you and I go to that Coastal Road?
I'm talking to you. I work in the company.
No, I'm not saying. So what makes that Ethiopia has export clusters today. They didn't build it yesterday, but they have it today. Ethiopia, Madagascar has, Kenya has.
It's painful. We didn't.
So we can't blame Trump. Trump is like wind don't blow, far Nash don't open. Our Nash is now open. So those that did not invest again, and that's why I'm using Lagos as an example. Akwa Ibom has more money.
Saudi Arabia is not even helping us. Saudi Arabia is even saying
Saudi Arabia. You're ready for all of them. Let's come to Nigeria. Akwa Ibom State has more cash than Lagos State. Akwa Ibom State they have more cash than Lagos State. Akwa Ibom State, they have more cash.
Are you talking of back? Are you talking of back allocation?
Yes.
Okay.
What they have more cash than Lagos State, but Lagos State has a deep sea port. I'm talking about Abraka deep sea port. But they didn't have the money to build. They built spaceship cathedral.
Brad is being a refinery that fine.
They are giving it. You're giving it to me. The point I am making is this: if Akwa Ibom today has no deep sea port, who are they going to blame? Me, Trump, or themselves? They have a cathedral. World class cathedral, church cathedral, they have why didn't they build a deep sea port? You see, in the end, we have to take responsibility. Like I said, Go to Ethiopia. They are celebrating this. They are saying this is an opportunity for us. In Ethiopia has lack of population. They have no oil.
Are you trying to say that we should swallow that because we didn't plan now?
I'm saying we should take advantage of it. We have AGOA. We have a Nigerian diaspora. So every Nigerian now, if you work in America today, you say, okay, where do I work? Can I go and tell them that I can do manufacturing for them in Lagos or in Aba or in Kano? Go and meet your Igbo guy and say, okay, if they are giving you too much tariff here, come to Nigeria. That's your opportunity. That's how they do it. In Igbo land, where I'm from, the Atwa here, you look for something that is booming, you bring to Nigeria and you import it. Now the business is exports. Look for something that is being tariffed, that Americans are finding difficult, that's expensive. Bring it to Nigeria and export it. We have to take advantage. If you think that...
Yeah, but we don't have the skills.
The skills will come. We didn't have the skills for IT. We did not have the skills for IT 25 years ago. We didn't have the skills for coding 25 years ago. Today we're the second coding. Why can't you compare to Olumide? Why can't you compare it? I didn't know what Windows was 25 years ago. Today everybody knows what Windows is. Why can't we compare? If you are a serious government today, you can train people on what they need to do in terms of export trade. We do it on this space here. There are many folks that want to do exports. We can't export cocoa to EU because of fumigation. Whose fault? Whose fault? We can't export to whose fault? Ghana. A guy came here and said he takes his head yam, the head of the yam from Nigeria, he goes to Ghana and plants it. So he's taking Nigerian yam, then he exports that yam to Canada. Why can't you export from Nigeria? Two things. Number one, we'll fail hygiene. Number two, high cost. So a Nigerian is taking head yam on this whole space to Ghana to plant. Whose fault only there? We have to give excuses.
You can see. Let's get agriculture.
Okay. All right. Let's get agriculture department has problems. That's fine. Let's get Elvis. Elvis.
Stop saying I know, but can you just
we have to put the government on blast to take the right decisions. We can't.
It's fair for us for you to know that Nigerians are suffering, and it's fair for us to also know that yes, we will also be attacking. Like they are
not attacking. I'm not attacking. I'm giving solutions here.
I've been quite critical, but the Nigerian populace is helpless right now. So the advice you are giving is long term. What I expect you to say is like, okay, short term advice. What do you tell the average Nigerian that is invested in the stock market, that is hedging against the dollar, that is hedging with the dollar, that has lost hope in the last 3 months? What do you think he should do? Should he wait for 5 years or to build a seaport?
I've not changed my commentary 2 years ago. I said, keep your dollars close. I haven't updated that commentary. And I've been okay. Then do what you want to do. I'm just saying this was just me. It's your body. Do what you do with your body. So again, that's number one. Number two, remember, I've had this space for 3 years now. Every Sunday, if I wanted to attack government, I would do it. Go to my Twitter timeline. I will attack. I give solutions. I write. I tweet, I do spaces. I have been giving advice for 3 years. Many of my advice have seen implemented. If I want to attack, it's easy. If I want to make money, it's easy. The point I'm making today, I'm just a guy, a Nigerian guy. The government has the advisors. They should do better. This government is the most private sector experienced government we have had elected into office since the creation of Nigeria. This particular government are the most private sector friendly, the most educated, the most sophisticated since the creation of Nigeria. This government is the most sophisticated, most private sector friendly. No, let me land.
Have you forgotten the 1990? No, what do you mean by private sector driven? Have you forgotten 1999, 2003? Because it seems like you're not looking at historical data properly. When you say market driven, what do you mean? Because
the folks they have are very exposed, understand the Nigerian economy. Ngozi Okonjo-Iweala was in short a gem, a national gem. She came in from America.
What of Arnold? He came from America too.
The point, but this government also has many people like that. Those guys delivered. You don't let me finish my sentence. That's why you are not. If you let me finish, you'll get where I'm going to land. Obasanjo had a good cabinet. Goodluck had a good cabinet. They delivered. The same with these guys. These guys have to deliver. That's where I'm going to with this. They have no excuse. They are sophisticated. They are worldly. They are personal driven. The same way as Goodluck's team. The same way as OBJ's team. Those two teams deliver. These guys have to deliver. We can't make excuses for them. They've got to deliver. They've been caught flat-footed. I can pull up my tweet today where I asked the question, what will happen if oil goes to $50 a barrel? Are we prepared for it? As of today, we have, this time last year, we had 4 budgets. 4 budgets. Nigeria was borrowing $2 billion in December 2024 to implement the 2024 budget. In 2024 December, we were borrowing $2 billion to implement the December. Come on. So if anything happens, we have to. Next year is elections. They will start doing elections. Everything will stop in Nigeria for elections from next year. Trump is doing tariffs. That's the story of the global economy. Have you seen anybody come out with a response from this government to say, okay, we have seen tariffs, this is what we want to do. Okay, we're going to reject this. Well, have you seen anyone? You answer.
That's the beautiful part. Yeah.
So why are you blaming me? Why are you blaming me? The Minister of IT, that we can, call centers is something that we can do tomorrow. Call centers, we speak English without a bad accent. It doesn't cost a lot of money. We have lots of uneducated youth in Nigeria that are IT sophisticated. You can go to those abandoned warehouse in Maturi. You close it up, you put AC, you put Starlink there, you have a call center. You train these kids on how to answer phone calls. You take that consular base from China, from Philippines, from Thailand to Nigeria. We have a good time zone. Are we doing it? Who will teach them to do it? Nollywood was created from thin air. Government didn't help. Fintech from thin air. Government didn't help. What has government created in Nigeria since you were born? What industry has created in Nigeria since you were born? Agriculture, they've not done it. Operation Feed Nigeria waited today. What has government done since you were born that has survived? If not for Nollywood in Nigeria today, what would our GDP be? Trade. Okay, thank God for Obasanjo with GSM. Thank God for him. But where is Nitel? Where is their own? That's just let's get others to speak. Elvis, you've got the floor, Elvis.
Yeah, good evening. Can you hear me?
Yes, I can, sir. Go ahead.
Yeah, so I just want to make some point, right? The first is Nigeria taking advantage of the tariff. So just as you've been arguing with Olumide, we are not. Unfortunately, Nigeria is not well positioned to take advantage of it, right? We don't have the infrastructures, right? Policies are not predictable. So even if there is tariff, you're asking someone to come to Nigeria to invest so that you will export to the US, right? He's still going to be afraid of the unstable policies in Nigeria, right? And again, if you then manufacture here to export to the US, remember that the whole goal of whatever Trump is doing is, of course, to topple China, right, in terms of trade, right? So Trump, at some point, might still come to tariff Nigeria more because he's identifying all those proxies, right, that companies are moving to bring inputs to the US, right? So at some point, he will still come back to tariff Nigeria more. So there are just several factors that make us not well positioned.
But he has tariffed us. We already have 14%, Elvis. He has already tariffed us 14%.
Yes, I know that, right? But what I'm saying is, if let's say Chinese firms come here now to produce and export to the US, right? He would identify Nigeria as a new proxy, right, for those Chinese exports, right?
Like Vietnam, right? Yeah. So, but would that do? Yeah, like what would that do? What we call origin. So it favors us because we now do what they call origin. So China will simply say we are going to put the capital. Then Nigerians will get Nigerian cotton, Nigerian power supply, and build the factory. It has more Nigerian content, so it would escape Vietnam's fate. You see the point I'm making? What America is targeting is when China comes to your country and builds a factory. Like in Ethiopia, you go to Ethiopia, those factories are owned by the Chinese, not the Ethiopians. So in Nigeria's case, China can say, we're going to give you guys the capital. You build it, but we're going to use Nigerian cotton Nigerian gum, Arabic, to make it more of higher Nigerian content. That way we escape the American Chinese lens. That's what they are looking for. They don't care about, they don't want China to just overtake them.
Right?
Yeah.
But again, I believe that to an extent, right, whatever Trump is doing is coming quite late, right? Because one of the reasons why China became a major production, one of the reasons, right, there are several reasons, because most companies that were producing in the US, right, they left the US because labor cost is much cheaper in China, right? Much cheaper in India, right? So they are going about to these places where the cost of labor is much cheaper, right, to produce, right? So the average American blue collar worker, right, would not accept the same wages that some of them in China accept, right? And they don't work as hard as so.
They don't.
There are several factors that
they don't have to. Elvis, again, the world has changed. America now has automation. Number one, so they can do the same things without using humans. Automation. That's number one. Number two, what does a tariff do? The tariff raises the cost, so it makes that labor that was cheap in China, it makes it irrelevant. So if you're going to make a pair of socks in China, it costs you a penny because you have cheap labor. So when they tariff you 46% like they've done, it goes to 4 cents. So which means if it's 4 cents, Tesla makes cars in America now, Abi. Ford makes cars in America.
Carlo, I was on this forum where like there are several US business owners, right? And they kept saying that the reason why most of them buy from China is because even with the tariff that Trump is imposing, right, it is still much cheaper for them to import from China than to produce in the US.
Yes.
Right? And
yes.
even if Trump introduces, so it's
no, but they're not targeting socks. They are targeting chips. They are targeting high value import. They don't care about socks. Import from China and pay your tariff. That's you. But what they are targeting, look at the TCMC is building 6 billion plants in Arizona. So that's what they are targeting, right? They are not going to onshore every product to America. They don't want to. They know China will still go to Nigeria, to Vietnam. Vietnam is not doing 0%. It's still China. They don't care about that. You can do socks and sneakers all day long, but they are steel, aluminium, chips. That's what they are really focusing on. They will not let China bring in steel.
There's a skill problem too.
Right.
There's a skill problem. Like I was watching a lot of policy, especially liberal economics, and they said that one of the reasons why they feel Trump's idea is dumb is that okay, if you're trying to bring jobs, where are the jobs now? Where are the skills? Because these things don't just happen in 6 months. The skills. Huh?
They'll train them.
They'll train them. You forgot what Tim Cook said, Apple. He said that China is the only place that where you can send
Who trained the Chinese? Who trained the Chinese? Americans. Abi, the Chinese just learn it. Americans train the Chinese to build the phones now, Abi. Americans train them.
The major issue is the cost of labor, not the training.
No, but again, that's what the tariffs do. The tariffs eliminate that advantage that China has. That's the whole idea. Raise the cost artificially, eliminate the advantage, so the goods come back to America. But the UAE president, the UAW, the United Auto Workers president, said that there is excess capacity in American factories to make cars tomorrow. He said immediately, his words, that there's excess capacity. So you see, if I'm a businessman, I would not make any car in America. I would not, because it costs me too much to make in America. I'd rather go to Mexico or Nigeria and bring my cars. I'll go to Innocent and tell Innocent to make my cars. But if there's a tariff, then what's the point? Then there's no advantage. I come back to the US, and they are targeting those kind of sectors. Boeing parts are made all over the world. I've gone to the Boeing factory. Boeing is an assembly factory. Details are from Japan, Italy. You see them just coming on. They fly them in here, then they assemble. It's called Boeing Assembly Plant. It's in Washington. They don't make the parts in America. They assemble them in America. So
one more insight, right? So Olumide was saying that the price of oil is dropping, and I think the tariff on autos, right? I think it affects the price of oil dropping, right? Because if people would buy fewer cars, right, then of course it means that the demand for crude would drop.
Why would people buy fewer cars?
cars coming into America will become more
But
expensive.
Americans make cars, so that there will be no increase there, right? Americans make cars, right? Americans make Ford, Chrysler, GM. It's all in America. So those ones will be cheap, Abi. BMW is made in America. BM is made in America. Mercedes is made in America. Kia, Hyundai, all made in America. So why would the price go up? If the parts are expensive, bring the parts to America. It's exactly what Japan did now. They tariffed Japan. Japan came to America and built plants all over the south of America. Honda is in America. Nissan is in America. So they make those. Toyota is all over the place. Not the number one selling car in America, is Toyota Corolla, Toyota Camry, Toyota Corolla. They're all made in America. They're not imported into America. They're all made here. So why would those costs go up? That's what Trump is saying. Make it here. If they make it here, the costs go up for labor, Abi, then he creates jobs in America. So you see how it's all tied in. Mr. Osazu, Mr. Osazu Obayuwana, how you doing, sir? Welcome.
Hi, Kalu. Hi, everybody.
What's up, sir?
The conversation has gone in so many directions. I don't know.
It's a wide topic, man. You know, I knew it was going to go. Only one does, but I know it's going to go like this because it's wide. You know now, it's a wide topic. There are many things happening all at once. Many things happen all at once. Stock market.
So let me try to address the things that my mind can recall. Now, first point. In order for capital to have confidence in any market, there must be stability in policy, stability in and physical and monetary policies. Right now, America doesn't have any of those things. Whatever Trump is doing now, there is no guarantee that the situation will be the same in 3 years' time, 4 years' time, or 5 years' time. So, as an investor, why would you want to take a gamble on a country that is politically and economically so volatile?
Let me ask you a question. If you had $1 billion to build a factory, would you build it in China or America?
To tell you the truth, with the stability in Chinese economic policy, physical policy, monetary policy, they seem to be a lot more stable than the US right now.
Okay.
But then that's something we can debate.
No, but answer now. Where would you build it?
Mm-hmm. Where would I build it?
Yeah.
I can't give you a direct answer to that.
Okay, go on.
I can't give an answer.
Yeah, go on, sir. Go on.
But I just made an observation.
Yeah, go on.
Look, the point is, you can't bully businesses into investing in your country. You've got to create the right climate and environment for them to put their money in your country. Starting a global trade war will not end well for anyone. It won't end well for the US. It won't end well for those that these tariffs are being imposed upon, because the world is so interconnected. I think Trump has this idea that all he needs to do to set things in the way he would like America to be is to just come with a bludgeon and then intimidate every other nation into doing what he says. And it just doesn't work that way anymore. Now, you were talking of American cars just now. Okay. You are at war with Canada, your neighbor. The American cars that you are talking about, that are being manufactured in the US, they go between the US and Canada about 7 times while they are being made. And now you are imposing a tariff on Canada. So when all those parts are moving to and fro, back and fro, you do know that they will be affected by the tariffs, right? You do know that. So those cars will also suffer a price increase. And it's the people who are going to buy those things that will be impacted as a result of that. And these cars are supposed to be locally made. Another point I was also going to make. I find it very difficult to understand what he hopes. I mean, you as a country, like you are saying, Nigeria should take advantage of the changes. You know that if you want to make major investments to take advantage of these changes, as Olumide was pointing out earlier, you're going to spend a couple of years positioning yourself to take advantage of that market. You can't do it overnight because you've already pointed out that in the areas where we could possibly take advantage, we're not ready yet. We don't have the infrastructure. We don't have the manpower.
So whose fault is that? So Trump should wait for Nigeria to be ready.
Not at all. Don't get me wrong. Trump is doing what he thinks will work for America, even though he's wrong. But I'm just saying that if you're asking Nigeria or any other country to simply just turn the coin over and start doing what will appeal to that market that has just opened up, not knowing how stable it will be for the next 4 months.
Okay, and then what's the other thing to do? Do nothing.
Is America the only market in the world?
Name the other market you can go to that is growing. Give me the market you can go to. Give me that market you want to go to.
You mean that there is nowhere to export anything in any other?
I just asked you a question. Give me a market that is growing. Give me a market like America. Just give me a market. Give me anyone.
No, okay. America is a huge market.
That's why he's doing what. So again, I get what you're saying. I hear you, and I think we're bringing personality traits into a business transaction. So many CEOs in America are quote unquote SOBs, but they make triple digits. Trump is a SOB. We are not here to canonize Trump. Trump is a narcissistic SOB, but it doesn't take away the policy of what he wants to do. I've highlighted here that number one, he has many things on his plate. America is broke. He needs to pay $5 trillion interest very, very soon. So tariffs coming. Why is the market crashing? It's on purpose. If oil prices go down, Lumide, Americans buy gas cheaper. There is a direct correlation between gas prices and America's present popularity. So Trump told Saudi Arabia, remember, it was 2 months ago, Trump told Saudi Arabia to increase oil supply. Trump told Saudi Arabia, and they said yes. Google it. That's why oil is coming down. Trump wants lower. Google it. Just Google. Just Google. Trump told Saudi Arabia to increase production, and they did.
Yes, you are corrupt now.
Okay, so but so when we come and say it is tariffs that is causing oil prices go down, Trump wants low energy prices for Americans.
Because US is the leading producer of crude oil.
Okay, but Trump wants low gas prices. That's the fact. So if he wants, so if we don't like it, export additives. I mean, you've got Dangote refinery, export your additives. So, but let me take a few points. America is the most stable market in the world today. Today, there is rule of law. Are they not suing Trump?
I won't go there.
Today, can you sue Tinubu? Wait, can anybody sue Tinubu when Tinubu said something is over? Today in America, they are suing Trump over the same tariffs. States, individuals are suing Trump over this, even though he has the power to do it. There's rule of law here. If you put $1 in...
Supposedly, we used to think America was a country of the rule of law.
But nothing has changed now. They are suing the man.
The world is looking at... Lumide told you something earlier that you, in America, you don't seem to see how we outside are looking at you and what is going on.
I think that's an unfair point, because what you're saying is that I'm being partisan. People are listening to the space. We have nearly 400 people. I'm explaining what is happening. I don't have to agree or disagree.
You need to look at a different.
Honestly. Okay, sorry. I don't get your argument. Olumde's argument is this: Trump is bad for Nigeria, so side with Nigeria and against Trump. That's what Olumde is arguing.
no, Carl, this is the argument. The argument is simple that Trump has disoriented the global order, financial market. Now, in Africa, he has made things worse, particularly for countries like Nigeria. And I said,
Not true.
A sweeping statement. It's a sweeping statement. Ethiopia is celebrating. Madagascar is celebrating. South Africa has 30% tariff. We have 14.
You know what you're saying, Ethiopia? Ethiopia is more of industrial, not a commodity country. Nigeria is a commodity
Whose
country.
fault now? Okay, whose fault are we a commodity country? Whose fault? Trump? Why won't we build our factories?
That's what I'm saying. Kalu, stop looking at everything from a naturalistic view, American naturalistic view. I'm saying look at it from the fact that, okay, there's some things that, he's trying to do, but he's harming the global economy. Nobody's saying what he's doing is not good for America.
How is it? Okay, Olumide, I asked a question earlier. Olumide, under Biden imposed a 10% tax on Nigeria. Nigeria didn't vote for Biden. Biden imposed a 10% minimum tax on Nigeria. Do you agree with that tax or not?
I'm sorry, guys. You guys were talking about AGOA earlier. Please, I just want to remind you guys that AGOA is going to expire in September.
Okay,
so what happens then?
So then the guy that gave us AGOA should go negotiate. I mean, we are blaming America for our failures.
I'm not blaming. I am just pointing out.
Okay, if AGOA is going to expire, let the Africans go and negotiate with America. If AGOA is going to expire, what are the Africans doing? Let them go to America and negotiate.
What I'll just tell you is that I know that Trump is not going to use 100 years.
I think you are putting me.
I can bet that the companies that will go back to America, or companies that it will be quite the same body.
You see,
billion investment.
You see, that's why I made. That's why I made.
And you guys we're talking about China. Look,
sir, we can't. We are going back and forth.
The only reason China knows that America does not want to see them grow in global economic stature. They've already factored that into their plan for years. So if you are thinking that these tariffs are going to stop Chinese economic development and growth and their global influence, I'm afraid you are.
But Osa, listen. Look at the history. Look at the history. When I said that's why I took time to talk about the history of America. Let me mute you, sir. I took time to talk about the history of America. What America is doing in China today is what they did to Japan 30 or so years ago. No difference. From the 1930s, where they blockaded Japan from getting crude oil to restrict its growth, and it led to Pearl Harbor, it led to America joining the war. No difference. The point is that I think we are focused on Trump. This is America's policy. Obama tariffed China. George W. Bush tariffed China. Clinton tariffed China. Biden tariffed China. If Trump goes today, the Democrat president will tariff China. I think these people because it's Trump, it's easy to attack America and say, no, he's been a bully. 10% tax was implemented on every Nigerian consumer by President Joe Biden and the OECD. Did any Nigerian complain? Nigeria said no. That's one thing Buhari did that I commended for. I wrote an article, I held a space. Did any Nigerian journalist come out here and say that Biden is being a bully? 10% minimum tax imposed. Did anybody complain? No. If Trump does it, it's bullying. Now, Vietnam has come to America and they're negotiating. That's what Nigeria should do. Go to America and say, what's your issue with us? This is your issue with us. Okay, we'll have to come back and renegotiate. And Vietnam has said that to America, hold the tariff for 3 months. Give us 3 months, America. Don't impose any tariffs for 3 months. Let us go back to Vietnam. We will talk and we'll come back to you. That's what I expect us to do. But not to sit here. If you think it's about Trump, If it is about Trump, if a Democrat becomes the next president, they will not remove this tariff. So they will not remove it. Stay there.
America before Trump. Sorry, Olumide, if you just can give me a second. Before Trump came in, okay, we didn't have America at war with its allies.
We did.
Yes,
we did.
They were talking about
we did.
China.
Mexico imposed a 100. I can share the issue with you. Mexico imposed a 100% tax on America's exports. Mexico in 1932 or so. I can share it with you. Okay, I apologize. Then let's move on. Let's just move on because I don't want to get what immorality is. Jabba dog.
Carlo, please, can I just make one point? Just to encourage everyone that let us kind of focus on what Nigeria can do. And I've heard many speakers speak as if Nigeria cannot do anything. It takes average of 2 to 3 years to set up a plant, and we have free trade zones along the coast of Nigeria in Lekki axis, and we have a couple in other states, including even some northern states. So we can actually set up things. As someone who is involved in setting up a particular one in the north, I can tell you that the opportunities are actually very huge. Just to point out some, average, Vietnam does $90 billion worth of apparel export to the world, 90 billion. Bangladesh does about 48 billion. China does about 360 billion. These are low-hanging fruits that Nigeria can actually
soak up labor, soak up unemployment.
This is where we should focus on. The labor wage in Vietnam is about $300. Bangladesh about $160. In Nigeria, if you pay $100 for semi-skilled workers per month, that's a very good payment.
Exactly.
In Aba, for example, the average apprentice, we are doing a project there. The average apprentice in Aba is earning $35,000. The average boss is earning average of less than $100 monthly income. So let's bring it back home to ask ourselves, because sometimes the average Nigerian elite is a bit far removed from the shenanigans of industrialization, because we lost a whole generation that has no experience with manufacturing, that has no experience with producing things. Most of our elites do an audit of everybody on this platform. Is that we are bankers, we are NGO workers, or we're financial people. Very few people have experience producing anything.
Ouch.
So it's really there's a big distortion between our perception of what is possible and reality. So that said, the opportunity for us, if you ask me, is to look at the trade patterns between US and the world, but not just US, Europe, because I'm convinced that Europe will follow the same wave that US is taking now. Simply because you cannot rely on a communist state.
That's why I asked that question. That's why I asked him that question.
Whether China is competitive or not, you simply cannot rely on China just because of its political makeup. That said, they want to move away, and they should move away. The question is to whom? Now, if we don't take a deliberate effort, you'll be surprised. Lesotho does $250 million of exports in garments and accessories to the US. $250 million. Which industry in Nigeria is exporting $250 million to the world, apart from oil and gas and urea?
Lesotho at the moment, Nelson?
Yeah, they've increased it, but they're negotiating because they are smart people.
Yeah, but South Sudan is not the point. It's not the point to bring to the table. That's how you negotiate now.
But you had production base to negotiate with. We have to now ask ourselves.
We are complaining.
Nigeria's largest economy. How much can you raise, you Osaso? How much can you raise? Which plants can you build? Because these are the questions we should be asking ourselves. Dangote has done it over and over again, showing that it can be done at the biggest level. So if we don't move away from this mindset of analyzing to paranoia, and without moving to actual concrete steps, I think we just waste our time here.
This is the point. Thanks for that, Nelson. I think the point is that we have to talk about what can we do. And like I've said, go to a state. Lagos is a bit too crowded. Go to Ogun. There's Ogun. There's even Bayelsa. Those coastal states. But like Calabar, because GE was there. GE went there, set up a $1 billion something there. That whole state, just designate it no taxes, special status, no federal taxes, no state taxes, no federal, no state, nothing. Only for FDI. So even if you're Nigerian, take your money abroad, bring it back, go to Calabar, don't pay any tax. You have that set up in Calabar, you can export 100%, no port duty, nothing. When they come, where will their workers stay? Will they not stay in Nigeria? Won't they fly into Lagos? Won't they buy yam from Kano? Won't they buy shoes in Nigeria? Abi? But you lose the taxes, but you gain the know-how. China did it with the cluster cities. We have to copy what has worked. Fighting, and it's like Victor has said, it's both ways. Even if you can't export to America, remember China is now buying goods from Brazil to go again. They're buying beef from Brazil. So where will Brazil's customers go to? Because Brazil no longer has beef to sell to them. They will come to Nigeria. So Nigeria has ranches and can do halal meat. We can also export that meat. I talked on this space about what's that plant? Alfalfa. In Arizona, they are fighting up because Saudis are buying land. Alfalfa needs sun, hot sun and water, which we have in Nigeria. Hot sun and water. So the Saudis and the Qataris have gone to buy lots of land to plant alfalfa. Just the grass. Alfalfa, multi-million-dollar in enterprise. Meanwhile, the northern Nigeria is lying there fallow with lots of space. So if we look at the plug-in of how the global economy works, we can plug in. Trump is going to be Trump. This Monday, he's going to put on that tweet. Two of us is going to do a tweet. Trump will be Trump. So you have to negotiate and position yourself knowing that Trump is Trump. You can't be arguing that, rain is bad. Rain is bad. It will still fall next rainy season. Whether you buy umbrella or not, it will still fall. Let me get Afri Bull. Thanks for hanging with you. Afri, what's your word?
Hi, Calvin. As you said, this is a bit wide. I can't even, I'm not sure to even touch on a few questions way back.
We've left Nigerian investing, but I think we have to do that space specific for this, just specific for tariffs. But I think we did a good job with the economic review.
Well, to touch on what Nelson mentioned, there is opportunity in the apparel market, and Nigeria does need to position. I think but Nigeria does need to position as far as policy and infrastructure. I've had two separate apparel companies owned by Nigerians last year who set up outside. So there's a Nigerian apparel company that set up manufacturing in Morocco. They got funding last year simply because of challenges in Nigeria.
Wow.
And there's another that's actually looking to, based on their success, they're also in Nigeria. They're looking to move to Morocco as well. So Nigeria, even the low-hanging opportunities that Nelson pointed out, Nigeria is losing out due to policy and the standard challenges with the market.
So
as far as the
Afribo, just a question. So you're saying a Nigerian company is leaving Nigeria to go to Morocco?
No, a Nigerian company left. There's an apparel company, the white label apparel company produced on behalf of Zara and some of the brands. They already left. They got funding and they've set up in Morocco. They're gone. So this happened last year. I was on that deal, so that was my experience there. But they cited challenges in the market in Nigeria for the reason for leaving. And they have their own brand as well that was in Vogue and GQ. They really wanted to build in Nigeria, but there were a host of challenges. I don't want to deviate the conversation towards that point, but to build on that, taking advantage of tariffs or the change of the economic climate is not very easy. It does take a bit of time. Even to give our current administration some flag, it's not something that can easily be done by Nigeria. And we don't even have the experience or the evidence that we can do it when we have a stable climate. So in this current climate, I know we have to do something, not to say we have, but I'm not positive that they will be able to adapt. Maybe on a private level, there might be states, as you mentioned, might be able to make some changes. But as far as the country, we don't have that dynamism in the office at the moment.
That's sad.
I'm just looking at the evidence. But it's as far as the tariffs have been, my only critique on Trump's tariff, it's a shotgun approach. You have a baseline 10% tariffs on almost all countries and then selectively higher tariffs on certain target countries. And we understand, they want to bring manufacturing back, or they want to. It comes from the position that they feel America has been taken advantage of in the last decade or 2 decades, and you can argue here or there whether you think that's true. There have been non-tariff limitations on America. Look at China; they have their own limitations with certain industries that can't be invested in by the US. Certain companies can't produce or provide their services in China. So, from the US point of view, it's a constant battle.
Yeah.
But also, I don't think Columbia mentioned that no one knows what's going to happen or whether this situation is going to stay the same after he's gone in the next 3 years or next 5 years. But historically speaking, tariffs don't change. The change of administration, they tend to keep those tariffs on. And my point is, this current climate we have isn't going anywhere over the next decade. Trump has changed the economic landscape forever.
Thanks for making that point again. Thanks for emphasizing that point. That's the point I'm trying to emphasize, that this has nothing to do with Trump. I mean is when he leaves, don't think they're going to reverse this policy. This is now the reality going forward.
Yeah, this is surely the reality going forward. If you look at historicals, those even Biden's tariffs or the tariffs before Obama's tariffs, they didn't change. They either add to them or maybe they tweak them a little bit. They don't change. It's seen as long as it's seen as some sort of advantage, they will keep them. And what that means is that everyone else either has to adapt. You either fight or most people will negotiate. And however you feel, it's a very brutish approach, and it probably does more harm in the short term. But if played well, it could work out for it.
I mean, my criticism of them is just that I don't think they've explained this properly. I think I get better explanations from people I follow. They're not really explained. I know they're trying to be purposefully opaque, but they haven't really explained to Americans why they need to impose a tariff. If you call 3 guys in the administration, you're going to get 3 different answers. So they have to be. It has to be something very. Say it, And again,
it's because it's been a while since. It's been a while since you had this tariff climate, at least to this extreme. Last time he was in office, but prior to that, that hasn't been the means of diplomacy for the US. So a lot of the new age economics don't really have that experience with the climate of high tariffs.
But so far, what would you say? Do you think it's working? Because I watched the guy, the economic advisor, saying that 50 countries want to come to America and negotiate. So do you think this gamble is working? Do you think it's too early to call?
It's too early to call because, for example, if we wake up tomorrow morning and the market goes down 10%,
it's going to go down 10%. The market's going to go down. The market's going to go down. But again, they look at. I posted for you, Robert Reich.
I know they will have a stronger plan.
I posted Robert Reich for you. Robert Reich said the stock market is not the economy.
This is true. No, but if I could pose a question to everybody, if your thoughts on how sensitive the market will be potentially this week.
So let me when Carlos Spain started, I looked at my crypto wallet, I looked at my exposure in the Middle East, and I was just like, okay, let me. So when Carlos was talking, I was just on my platform, I was just checking, and I just saw a trigger. And I just checked again, and I saw Ethereum at 1,580. While Carlos Space was on, it was 1,007. Let me tell you what's happening. You see, before Carlos Space, I was reading Goldman Sachs, JP Morgan, and Pepe Jeffrey's investment reports, and they said things that scared me. They said that hedge fund guys were going to liquidate about $30 billion in the coming days if President Trump doesn't come out with a positive response to the market. And I felt like, okay, maybe this is a buy side that most times when investment banks say sell, you do the opposite, you buy. But what really scared me more was when I saw a editorial report from different fund managers saying that Trump has really messed the market up. You see what's happening in Bitcoin this evening? Let me just give you an insight. If you look at last week, with all the drama that happened, Bitcoin was able to hold the 82,500 support line. And really, why was that possible was because BlackRock has about 51 billion worth. At the time, it was about 85,000. So they have about 500,000 Bitcoins. If you look at MicroStrategy, they have about 400,000 Bitcoin. If you look at the US government, they have over 100,000. Look at the Chinese government. So systemic entities own Bitcoin. So you expect some form of stability, not like the volatility we saw in COVID or the years back. But right now, Bitcoin broke below 80,000 and the chart now looks like Red Sea. So if Carl is saying that, okay, Trump has good we agree, but the market right now, the market is parabolic. And you know that there's a positive correlation between US stocks and the crypto market lately. So except the president says something the market wants to hear, we might be ready to go to the village. That's my opinion.
But again, the comeback is going to be that this is the plan. The plan is to cause stocks to fall so that funds flow to bonds and yields fall. So what you're saying, you're actually saying that their plan is working. It's on purpose why this is happening. Bitcoin and stocks didn't wake up and say we're going to fall. They could have done this with letters and we'll know about it and the market will not have fallen. They want the market to fall to force capital to flow to bonds. There's a stock market, there's a bond market. The bond market is 20 billion trillion times bigger and more important than the stock market. That's what they're basically saying. But we buy stocks, so we know Tesla, we know Snapchat. But the bond market is the gorilla that drives the global economy. The most important investment in the entire